gentlemen, I understand it's afternoon in Singapore, so
yes.
Good afternoon. This morning, I just want to say thank you so much for joining us, wherever you're joining us from. I understand we have registrations from over 50 countries around the world. So thank you very much for making it to this second training we're hosting as Clapton Re. Obviously, this very second training, we are hosting it together with OESAI. So you might recall, those of you who joined our first training, we held it in March in the first quarter. And based on the feedback that we received, we came up with today's topic, which the very able Pooba is going to take us through. So the high number of registrations is really a clear indication of the level of interest in the topic that are a very key partner to which we are, as Clapton Re, we are a member. Thank you so much for agreeing to co-host this event and for helping us put things together. Also, I would like to thank the staff at Clapton Re. We have on the call Cynthia, our Chief Operations Officer, Tionga, our Head of Underwriting, Nkumao, our ICT Manager, and we have Mateta, our CFO, and the rest of the team. Also, special thanks goes to Pooba. I will not attempt to state his surname. He will tell us his surname. I may need to go to school to learn how to pronounce it. But special thanks to you, Pooba, for agreeing to facilitate this training today. Pooba is a highly sought after who comes in highly recommended to Clapton Re. So as an organization, we are really committed to supporting capacity building. As you will note, this is part one. It means there's a part two coming. Therefore, I would like to urge each and every one of you to be on the lookout for the second part of this training. Check our different platforms, that's LinkedIn, Facebook, and our website. We will be able to publish the next training that we're going to conduct, which will be part two. And also wish to mention that we'll continue working hand in hand. Those who attended the first training, you notice that we worked with other partners locally here, and today we're working with OESAI. So this is our deliberate intention of collaborating with different stakeholders. A few things happening at Clapton Re. Today we are publishing our newsletter, our third newsletter, and the key highlights of the newsletter, firstly, is to outline our top line performance for H1. So look out for that. I'm also pleased to announce that Clapton Re has been rated by Moody's last month. This is in addition to the GCR and Bloomfield ratings that we received earlier in the year. And ladies and gentlemen, all this achievement has been done within the first 9 months of operations. So we look forward to the continued support from our cedants, brokers, reinsurers, and other partners on both facultative and treaty reinsurers. So without taking much of your time, I know that during this training, some will be learning, others will be unlearning, others relearning, while others will be confirming. So in whatever category that you fall in, I want to urge you to make the most of this training. Thank you very much, and God bless. Over to you, OESAI.
Thank you, Webster. Thank you for the introduction. So before I introduce our speaker for the day, I want to say again, good morning to all the delegates. And on behalf of the OESAI Management Board and Secretariat, as well as our very generous sponsor, Clapton Insurance, I'd like to welcome all of you who are joining us online for this webinar. OESAI mandate is to work with our regional partners to increase technical skills capacity within the industry, and we fulfill this mandate through the webinars and technical skills workshop that we host in the region. So we are very delighted to have this webinar going on. We are also delighted to host this event, which has had such tremendous response from the markets. Over 400 delegates registered from Africa, Asia, Europe, and America. We welcome all of you to this webinar. May I also take this opportunity to thank Clapton Insurance for partnering with OESAI to make this webinar possible. We value your partnership and thank you for recognizing the importance of skills development, especially as the sector seeks to further develop technical skills to better serve our clients. Our trainer for this webinar is the very knowledgeable Mr. Pooba, a regional risk consultant based in Singapore with 3 decades of practical experience in risk insurance. Pooba is a professional engineer specializing in property, engineering, and mining. He's a regular lecturer at the Singapore College of Insurance, and is also a published author. He travels regionally in Asia, Middle East, and Africa, consulting on risk surveys and training. We are indeed honored to have him as our trainer today. May I also announce that the attendees to this event, who are members of the Insurance Institute of South Africa, IASA, will be awarded 7 CPD points for attending the webinar over the next 2 days. So I request all of you to log in with the registration, with the 2 names that you use to register, and stay through the whole sessions for you to be able to gain from this webinar, and also to be able to get the CPD points. So thank you for attending. Enjoy the training. Over to you, Pooba.
Thank you, Maureen. Just wondering, were you going to invite Secretary General to join us?
SG will be able to join us in a while. So as we continue, she will also be able to say hi. Oh, she is. Hi, Rose. Good morning.
Morning, team. Pooba, thank you for checking out for me. I've been here and wondering what time is somebody going to call me out, but thank you so much. Mr. Webster, thank you so much on behalf of OESAI for giving us this opportunity to hold this event. We are so delighted that we've had, to be quite honest, such a high interest in the number of registered participants. If we look at our report, we had over 700 people registering, and that really means that people do have a lot of, what do I call it, that Pooba, people are really, they know that you're knowledgeable in this area or in this line, and they know that the training is valuable to them. And so it's quite interesting, even just having people from outside our region, because OESAI operates in the Eastern and Southern Africa region, but I've seen we have people from Bangladesh, we have registered participants from America and all over. So Clapton Re and Mr. Pooba, it really means that there's something that you two are doing right, and we are delighted that you chose OESAI to be your host for this particular event. So I'll not take so much of your time. Let us start. Pooba, thank you. Over to you.
Thank you, Rose, for the short and sweet briefing and introduction on behalf of OESAI. OESAI is not new for me, because we have done projects with OESAI in the past, and Africa as well. We have done work in Mauritius, and we have worked together with various insurance companies in the African continent as well. We're happy to be here. So allow me to share screen to get on with the program. We have prepared a very interesting collection of slides to cover on this interesting topic entitled Appreciating Industrial All Risk Policy and Machinery Breakdown Coverage for the mining and subsurface industries. That's our focus today. I hope you can all hear me and hear my voice and see the slides. Is it okay, guys? Maureen, can you hear me?
It's good.
Okay, thank you.
It's
Thank
good.
you. Thank you, guys. So in order to enable a more effective training session, I will be muting everybody. But if anybody wants to speak or ask questions, we suggest that you use the chat group to ask questions, because it's quite a big crowd today and we can't be having too much of voice interruption because of the big group. There are some 300 participants on this Clapton Re program on industrial all risk and machinery breakdown. So the course is going to be over two mornings, this morning and tomorrow morning, and we'll be having some amount of details on the industrial all risk policy today. I expect some of it will overflow into tomorrow. Then we will touch a bit more on the machinery breakdown subject. And as Mr. Webster mentioned just now, today is day one. Today, these 2 days is supposed to be the first part, because a couple of months down the road, we will continue with the second part, because it's quite a big and wide subject, the industrial all risk and machinery breakdown coverage in the mining and subsurface industries. So this is what we'll be doing over the 2 days. And to see the response, there's a lot of response from a lot of people from different locations and so on. So allow me to move on with the slides. So welcome to this little session entitled Appreciating Industrial All Risk and Machinery Breakdown Insurance, Mining and Subsurface Industry Part 1. So we are running the class today, 26th of July, and tomorrow, 27th of July, which is the morning time zone in Zambia and Kenya and most of Africa. However, in Singapore, we are in the afternoon. It's approximately 3:30 in the afternoon in Singapore. So with the globalization, training is now conducted virtually, and we're happy to be working with Clapton Re on this program. So thank you, Clapton Re and OESAI, for hosting this program. And thank you to the Clapton Re team, Mr. Webster, Tiongi, Cynthia and the colleagues, and also Maureen and Rose from OESAI, who we've had different discussions over the last few weeks in the build-up to hosting this program. For a start, allow me to just do a short introduction about Talent Asia Training and Consulting. We are based in Singapore, but we are conducting training, risk survey, and providing advisory technical expertise. Not only in Asia, but we have some work in the African market, in the Middle East, and also in a lot of areas in Asia. There will be a poll exercise being conducted tomorrow. So watch out on day 2. Tomorrow we will do the poll. So for now, please pay attention, sit back, pay attention. Remember to take notes. Please write down, take notes as you go along. This is going to be an interactive session. Avoid the mic, but use the group chat. Use the group chat, and I will also be using the whiteboard to make certain points clear. So don't be afraid to use the chat to share with us your questions or comments as we go along. All right, guys. Yeah. So for a start, let's have a short, quick introduction of all the participants in the class. Can I just have a short name, your company, and your country in the chat group? This is just to recognize who are the parties in the class. A short name. So if you just put your name, my name is Pooba. My company is Talent Asia, and I'm calling in from Singapore. So please put those 3 points down. your name, your company, and your country, so that we know. So there's, the organizers will also take note of the parties who are on the course. We've got people from all over the place. We've got, of course, Clapton Re is here as well, but we have participants from Ethiopia, from Zambia. We've got Kenya. We've got Malaysia as well. Okay, and we've got Zepri. We've got Kenya Re. We've got Botswana, various UAE as well. So while the names are coming through, I'll get on to the next slide. Thank you all for your response. For the course itself, we have slides, we have discussion activity, we welcome questions by chat, and we have Q&A. So we're trying to make it interactive, but without the mic option, because there are too many people in the class, and if there's too many people speaking, it might be quite an obstruction to the effective running of this class. So what we're doing is, for this session itself, we have the introduction to the marketplace, a little bit about the mining industry, then we will dive into the industrial all risk policy. We look at coverage and coverage and clauses. Then we have the machinery breakdown cover. We have the risk survey bit, risk survey prior to accepting the coverage. And then we have some case studies. So that's sort of the overview of this 2 days. Okay, there's also going to be some miscellaneous points being included together with the Q&A. All right, so the mining industry in Africa is one of the oldest active industries. There's a lot of work going on. And here are some 10 things that you don't know about the mining industry in Africa. So I picked this up from the net. It's not that I wrote this myself. There are various very interesting points. Mining started with the discovery of diamond on the banks of Orange River, 1867. Mining industry works 24/7. A blood diamond is a diamond mined in a war zone and sold to finance and insurgency. These are very interesting points about the mining business. Africa is an important world producer of copper. Africa holds 30% of the planet's mineral reserves. And Africa's contribution to the world majors metal is less than 7%. So these are some important points about the mining industry that we thought we should just share with everybody to bring the participants to the same page about these mining and subsurface industry. Here we have some technical information about production, statistics about the different material and which are the countries which are producing certain valuable items. You've got diamonds coming from Botswana, Congo, South Africa. Then you've got gold coming in from South Africa. And there's all sorts of questions, all sorts of locations from around the world. And these are, okay, there is Sammy. Sammy wants to, Sammy, you want to ask me a question? You can drop me a chat. Better you drop me a chat, Sammy. Sammy. Please type. Okay. Okay. So moving on. So these are some statistics about the mining production in comparison to the world material production for certain items like steel. Steel is only 2% coming from Africa. Aluminum is 5%. But look at uranium, gold. Gold is 89% coming from Africa. So there's a lot of activities involving metal mining. So mining activities in Africa are pretty hectic and it's very important business. So when Clapton Re explore the type of topics that we should host for this course. Mining and the application of the industrial oil risk and machinery breakdown cover appear to be quite relevant to this particular industry and for our insurance business itself. So you can see here, these are some production information about the production of gold. The production in gold in Ghana, Mali, and Tanzania over a period of 30 years. You can see that there's a total trend of increase in Ghana, Mali, and Tanzania in the African continent. There's a general upward trend in the production of gold. Swiss Re, in one of their publication commentary on the mining industry, stated that mining is a risky business. So here we have it. This is the kind of feedback. We have a feedback regarding the mining business. It is a risky business. So maybe we will, Sammy wants to say something. So maybe I will let Sammy say something. Now, where do I find Sammy? Sammy. Yeah, Sammy, you want to say something? Yes, Sammy? Yes, Sammy? Okay, Sammy, I'm not able to talk to Sammy. All right, moving on. Here are some records of here are some information about, okay, this was what was mentioned by Swiss Re. Mining is a risky business. Moving on, in 2005-2006, there was a difficult year for mining underwriters, and there were quite a few large losses reported in the African region. So you can see the losses were ranging from 270 million US up to about 25 million US landslide. You can see there were various losses suffered during this period of time. Some are underground fires, there was earth tremor, there was cyclone, there was also flooding that took place. So please remember that there are losses as well in the mining industry. There was the South African mine disaster that happened at the Wild Reefs Mine in May 1995. This was quite a critical disaster because some 100 mine workers were crushed to death when a 12-ton underground train plunged down a vertical mine shaft and hit the crowded elevator almost 1.5 miles underground. So you can imagine the impact of the falling train. So this was quite a severe disaster that affected one of the mines in South Africa. So welcome, guys. Welcome to Singapore. I'm happy to be here from Singapore to share with you some little background about the industry in terms of mining and the subsurface industry, and then related to the industrial oil risk and machinery breakdown coverage. So this is a photograph of Singapore, and you can see the little decorative item in front is called Merlion, and Merlion is where it's a symbolic representation of the historical Singapore lion that is sort of related to some history about how the island nation of Singapore was formed. It was formed some 160 years ago, and since then Singapore has gone on to become a business center for Asia. And in terms of insurance and reinsurance, it's also one of the biggest cities for insurance business, besides Hong Kong, Dubai, London, and maybe Bermuda. Singapore is also a very well-established focal point for the insurance business. Okay, so this is Singapore. And I want to just mention to you guys that Singapore is surrounded by other countries like Malaysia, Indonesia, Philippines, Thailand, Vietnam. These are all other countries. So in Asia, there's a whole bunch of countries, Asian countries. And of course, China is right up there in the north. Then you got Myanmar, you got Indonesia with a lot of islands. So Singapore is the middle of all these countries, and we are an island state by ourselves. So how far is Singapore from Lusaka, Zambia? From Clapton Rees office, we are only 8,570 kilometers away. That's how far we are. And the journey here is marked as 15 hours. But when I checked on the Google flight information, it will take at least 25 hours to get to Lusaka in Zambia, because the flights don't go direct from Singapore to Lusaka. We have to fly to the Middle East. We have to fly to Dubai, and from Dubai, we then head to Lusaka in Zambia. That's the same for most of the African countries. There's no direct flight. We have to go by the Middle East. It's possible to fly to South Africa or to Addis Ababa in Ethiopia directly from Singapore. So we are quite a distance away, and you can see Singapore is at the south of Malaysia, surrounded by Indonesia, Philippines, Vietnam, Thailand, and so on. We are at a distance of 8,500 kilometers away. We are all recovering from the COVID-19 situation. Yeah, we are recovering from the COVID-19 situation, and would like to ask a question to the class. What does the meaning of COVID-19? Before we forget the history about COVID-19, why is it given the name COVID-19? If you can type your answer in the chat group, I want to see what is the full name for COVID-19. Please type your answer in the chat group. Please type your answer in the chat group. What does COVID-19 mean? COVID-19 means? Please type in the chat group, guys. I want to see some answers in the chat group. What does COVID-19 mean? Oh, looks like the VSI team from before I could read it, it's just everybody's giving me the answers. Yeah, thank you. Charles, Irene, Sweet, and Faye from the VSIC team. Done well. A lot of people have given the right answer. Oh, thanks a lot, guys. There's a lot of response. Thank you. You guys are all on the ball with the chat function. Thank you, guys. And yes, the answer is correct. It's actually coronavirus disease 19. And this is the short form is COVID-19. So just wanted to say hi to you guys. And during the COVID-19 period, during the pandemic, the peak of the pandemic, we had movement control order, we had circuit breaker, we had curfew, we had lockdown. So different countries had different arrangements. So we had different arrangements in different countries, but basically you couldn't go out, offices were closed, businesses were not operating, people were struggling due to the restrictions. They couldn't earn their money or get money from the business and so on. So this happened during the COVID-19 period. So from the pandemic stage, now it's moving to the endemic period. So endemic is very much localized. So localized meaning that travel has resumed. So we are able to fly, we're able to get to the airports and take a flight. So things are slowly opening up. Things are opening up. That's good, but don't forget to have your mask on. As I was speaking to our friends from Clapton Re before we started the session, Tiongi was telling me about they still use the mask in Zambia, just like in Singapore. We still have to use the mask when we go to the shops, or we go to the shopping mall, or if we take a public transport, if we take a bus or the train, we have to keep the mask on. But otherwise, if you're going to some open area, it's fine to do without the mask. This is just a photograph to share with you the connection between Malaysia and Singapore. Malaysia and Singapore are linked by a bridge. So in the normal period, there's so many cars traveling from Malaysia to Singapore. But during the COVID period, for the first time since 1928, this bridge was closed off. There's no buses, no cars traveling on the bridge. But since this year, since 2 months ago, this bridge has been reopened. This bridge has been reopened. So I just thought I'll share with you what's going on in Asia. The link bridge between Singapore and Malaysia was closed for nearly about 16 months, and now they are open again. Okay, so the COVID-19 loss reports and reserved by insurance company and reinsurance company, millions of dollars. So does anybody want to tell me in the chat group, what is the loss from COVID-19? How many million or how many billion? So what's the loss? Loss from insurance payment, insurance loss due to COVID-19. What sort of figures are we looking at? Yeah, can I see some numbers in the chat group? Insurance loss from COVID in terms of the reserves by the insurance and reinsurance companies. What's the figure like? Can I see some numbers or guess? 44 billion. Elizabeth said 44 billion. Belkisun Abhinav said 44 billion as well. Yeah, I think that's it. Yeah, I think, yeah, that's about the number, because I've got it as 44 billion as well. It's the third largest cost to insurers of any catastrophe, behind Hurricane Katrina and the 9/11 New York Twin Tower attack. So you can see 44 billion is a big figure. It's a big figure. These are the insured losses from COVID-19. It's a bit lower than Hurricane Katrina in the US and the New York 9/11. So this was quoted by the insurance broker Howden. Howden gave a press statement working out this number of 44 billion. All right. So due to this COVID situation and site work restriction, there's been a lot of changes. So the production cost goes up. The production of mining industry also goes up. So due to the increase about 10 to 15% has been suffered in a lot of industries. A lot of industries are affected due to the COVID, the post-COVID situation, because you need to have more supervisors, you got to observe social distancing, you need to have to wear PPE. I was going to ask you all about PPE, but I'll come to that in a minute. So these are some of the background, the run-up to our detailed discussion regarding the mining industry. So you got to know that the production cost has gone up due to the COVID, or rather the post-COVID period. All right. So allow me to introduce myself. My name is Pooba Mahalingam. I'm based in Singapore, and I do a lot of work, a lot of training and risk survey work, not only in Singapore, Malaysia, but I also used to travel to various regions in Africa, Middle East, and Asia. But due to the COVID, we need to be innovative, and we come up with virtual training options. Not only virtual training options, we are also involved with virtual surveys, virtual risk surveys that we have conducted without going to the site. So these are things that we have done in the last 2 years due to the COVID pandemic issues. So I was the president of the Insurance Law Association, ILAS, for 3 terms, and we are conducting training, risk survey, and consultancy. So here goes. The company that I work for is called Talent Asia Training and Consulting. I'm also the author of an engineering insurance book entitled Engineering Insurance. It is published by the MRI, the Malaysian Insurance Institute. Okay, so that's sort of the general introduction about myself. I've got some photographs to share. This is the engineering insurance textbook of which I am the author. It's published by the Malaysian Insurance Institute. These are some of the training that we have done in the past. These are physical training. You can see here, we brought the participant to Singapore Land Transport Project site. And you can see everybody's enjoying themselves and learning something. This is something we did with the Malaysian Insurance Institute, a 2-day workshop on construction projects. And then this is on risk management in construction projects. This is something we did on business interruption claims in the Bangkok market. We spoke at the Jakarta conference on NetCat. This is the Asia NetCat Climate Change Conference organized by the Asia Insurance Review in Singapore. This is in Mauritius. Look, that's me down here. I'm here with all the people in Mauritius conducting this training. All right, that's good to know. I know Mauritius. Now I've got a question to ask you all. Which countries are these participants from? Anybody want to guess? Please type your answers in the chat group. Which country is this? Which countries are these people from? Which country? So I'm getting some answers. Let's see whether which country is this? I've got Japan, China, no. Japan, no. Vietnam, no. Korea, no. Malaysia, no. China, no. Korea, no. Japan, no. Japan, no. Shibili says Japan, no. South Korea, no. Taiwan, no. Malaysia, no. Hong Kong, no. Malaysia, no. Korea, Indonesia, no. Japan, Mongolia, yes. Yes. We have one correct answer. We have one correct answer from this participant who is from Dishon Nyakwara. He said Mongolia, right? Japan is not it. There's a lot of answers like Turkey and Korea, China, Malaysia, Asia, yeah, because Mongolia is part of Asia, Pakistan, Philippines, India. Looks like you guys are just giving answers. Yeah, good for trying, guys. Thank you. But the correct answer is Africa. Sorry, Mongolia. You guys are in Africa, but the correct answer is Mongolia. So this one we have gone virtual. This was one of our last events face-to-face before we went to conducting training using virtual. So this is in Cambodia. It's a Cambodia class. This one is in Bangladesh, which is in Asia. India is also in. We have done training in India. We have done training in Africa. Yeah, this is a training. You can see there's some participants in Africa. We have done some regional training in Singapore, Malaysia, Indonesia as well. We have done work in Singapore. This is with the Singapore College of Insurance. We have regular programs with the Singapore side. So this is one of our Singapore training. This was in Kuala Lumpur not too long ago, 3 weeks ago. We had a 3 weeks ago session. It was a face-to-face training. We had a site visit and we also had participants. We had a good crowd over there, and we had a guest speaker, an insurance broker who spoke to us on Zoom. Okay, so this was one of the events. This is the virtual risk survey that we conduct. We conduct virtual risk survey. And virtual risk surveys are conducted without going to the site. We have a Zoom interview to collect information. Then we also will ask for documentation. And finally, we do a Zoom discussion to clarify and collate information for the report. So this is a sample of a virtual risk survey we did in Vietnam. Okay, so for virtual risk survey, we're using the Zoom, risk premises, and then we put up the report. So today is the first day of the tour. I want to just find out a bit about the response regarding your experience, knowledge, and expectations for the 2 days, and why the need for IAR policy. Is it compulsory? So maybe I can ask. Okay, there's a question here. There's a question here from Ivan Mel. Ivan Mel, are you able to unmute yourself? Ivan Mel. Ivan Mel, you want to unmute yourself? Yeah, Ivan, you want to speak to me? Hi, Ivan, are you able to speak? Are you able to speak on the mic? Hi, is it Ivan? Ivan? Ivan, is it you? Ivan, can I hear you? Okay, I can't hear Ivan, but his question is some IT issues. So yeah, so we used a video call. We didn't go down to the site. We used a video call to collect information about the project. So meanwhile, can I invite Barbara Monyema to speak to me? Barbara, are you able to speak up? Barbara? Barbara? Barbara, are you able to speak up? Barbara, are you there? No? All right. So I just wanted one of you to just introduce themselves and speak about the IAR policy, on what you know about the IAR policy. Maybe I ask Asrati to speak. Asrati, can you speak? No, Asrati can't speak. How about Augustino? Augustino, can you speak? Or Edita? Edita, can you speak?
Yes,
Hi, Edita. Where are you from, Edita?
from the Philippines.
From the Philippines. So you're from Asia. So are you familiar with the industrial all risk policy?
Yes, but
Okay, why don't you introduce yourself in terms of your background, the company you work for, and what do you know about the industrial all risk policy?
Okay, I'm Edith Suarez. I am now connected with Visayan Surety and Insurance Corporation based in Cebu, Philippines. I've been with the company for the last 18 years, and right now I'm handling the reinsurance, underwriting, and suretyship of the company. IAR policies are very important, especially in a growing country like ours, because this covers specific perils on industrial risks. The perils covered under IAR are not the usual perils contained in ordinary fire insurance policies. We have a combination of course, there's fire, and then there are other machinery breakdown. You can even put in there electronic cover, and engineering risks.
Yeah.
So all bundled into one policy, which is necessary for technical industrial risks, which need a wide range of protection.
Okay.
And
Thank you.
that's why I joined this seminar, so that I could learn more from you. I also once attended the Contractors All Risk seminar you conducted, and I learned a lot from it.
Yeah, which organized by the IIAP.
IIAP, and it was in Singapore also through Zoom, and it was a very, very useful session, because I brought a lot of knowledge and learning to the work environment in my company. So thank you, Pooba, for all of the.
By the way, do you know Clapton Re? Do you do any reinsurance work with Clapton Re of Zambia?
Come again?
Do you know Clapton Re Insurance Company?
Oh, we are a client of Clapton Re. We are a very, very important client of Clapton Re. In fact, most of our IARs, CARs, property insurance, and even marine hulls are being handled by Clapton Re. We've got a wide portfolio of insurance products reinsured with Clapton Re. And that's why I'm so excited, especially when lately I learned that they were assigned a financial rating by Moody's, and I was happy. So congratulations, Clapton Re, and we are a proud partner of your company.
Oh, that's great. That's great. Thank you, Edith, for your kind words and support to Clapton Re, who is actually hosting this program, and they engaged me to conduct this training. So thank you very much for your kind words, and we hear some good comments from coming all the way from Philippines. And Miss Edith is also a client of who uses Clapton Re services for the reinsurance business. So can we get one more spokesperson, somebody from maybe Bola Oniyedi? Bola, are you able to speak? Bola, are you there?
Yes, I'm here.
Hi, Bola. You want to introduce yourself?
No.
You want to introduce yourself, Bola?
Okay, yes. My name is Bola. I work for Continental Re. I head the treaty unit.
Wrong platform. wrong
location.
Which city are you located in?
Lagos,
Bola?
Nigeria.
Okay. That's good. So, do you have any good words to mention about the IAR policy?
Yes, IAR policy is a combined policies that covers accidental damage to properties.
Yes, that's good. Okay, thank you, Bola. Thank you for taking time to join us on this Clapton Re program.
You're welcome. Thank you.
Okay, maybe I just take one more introduction. Can I ask Amanda Franguan? Amanda, are you there? Amanda, are you able to unmute yourself, Amanda? Amanda? Amanda is not able to speak. Then we try. We will then get on with the program, because we are also running short on time. So the industrial all risk policy, it's not compulsory. It very much depends on the client's risk management program. They might buy a fire policy, or they may buy a property policy. So the industrial all risk policy acts as a protection. It covers for all perils. Unlike the fire policy, the fire policy is very specific. It's very specific. And okay, Amanda says she's got a problem with the microphone, so we will not disturb her. Thank you, Amanda, for explaining. So I just want to mention that the IR policy is actually, if you compare with the industrial, if you compare the policies, you have two types of policies. You have peril-based, you have peril-based policy, and you also have there's some disturbance, so I will have to block the noise. So you also have the all risk policy. So all risk, it covers for all sorts of risks. So the peril-based policy will be like the fire policy. The fire policy is one of them. Then you may have the CECR. CECR, very specific. They cover only specific perils. So the fire policy will cover for fire, lightning, and also it covers for explosion. But you can add on. But if you want to add on certain perils, you have to pay extra money. So the CECR policy covers for 8 perils, only 8 perils. Okay, so that is civil engineering completed risk. Sometimes you've got some plant, you may have some plant and machinery policy. They are also, they could also be peril. They will have perils to cover them. But all risk policy will be, example will be the IAR policy is very all risk, or you may have the erection all risk. But please note, although it says it's all risk, but there are some subject to terms and conditions. They do have terms and conditions. So there are terms and conditions. It doesn't mean it covers everything. There are terms and conditions. So that's sort of the big picture if you compare between the peril-based and all risk. These are the sort of broad. So there's a very nice comment by Evelyn Leanda. She says the IR policy is important because it protects your business from financial implication in case of material damage or breakdown of machinery causing a halt in operation. It's a wider cover. But Evelyn, why don't we ask Evelyn Leanda to speak on the mic? Evelyn Leanda, are you able to speak? Evelyn, are you there? Evelyn, where is Evelyn? She has got a very nice text message. So Evelyn Leanda, are you able to speak? Or maybe she doesn't have a mic. Evelyn Leanda? No. No, Evelyn Leanda. Evelyn Leanda, can you speak? Maybe not, maybe not. Okay. All right. Thank you, Evelyn, for your kind words about the difference. So one is peril-based. So peril-based, it must be narrowed down to a particular peril. So fire policy, you must have a fire, you must have a lightning or explosion. Or if it's an all risk, it's very wide. It covers from any perils. It can even be a impact of a vehicle. This is quite wide. It can be impact by a vehicle. It can also cover impact by vehicle. For example, I'm just giving an example. For example, it can cover impact by vehicle. So this is the big picture if you compare peril-based and all risk. So today in our class, we are looking at this one. We are looking at the in today's class, we are looking at this all risk policy. We are focusing on the IAR product. That's our focus for today. Okay, so now I can go back Yes, there's a feedback from Florence. Florence Awadogan. Florence says IR is a wider all risk cover, limited by exclusions. Yes, there are exclusions. Rebecca says that IR covers all risks unless specifically excluded. Yes, that's what I'm saying. Subject to terms and conditions, there are some limitation. So Rebecca, maybe I can invite Rebecca to say a few words. Rebecca, are you there? Rebecca. Yeah, Rebecca Ocheng. Rebecca Ocheng, can you speak to us? Rebecca Ocheng, can you speak to us?
Yes, I can speak.
Hi, Rebecca. Where are you located? Which company are you from?
Hi, everyone. Hi, Pooba. My name is Rebecca from Kenya Airways. I'm located in Nairobi, Kenya.
Sorry, you said you're from where again? Kenya?
Kenya Airways.
Oh, you're with the airlines?
Yes.
Okay, so you're in the risk or insurance department of the airlines.
Yes.
Okay, and you are using industrial all risk policy to cover your facilities, your buildings, and so on.
Yeah, we cover our buildings, our properties, our electronic equipment, and our machinery as well.
Okay, that's good. Thank you, Rebecca, for sharing.
Thank you.
And you have said it very correctly that the industrial all risk covers all risks and unless specifically excluded. That's a good one. Thank you very much. Do you also have the business interruption extension for under section 2? Rebecca? Okay, I miss Rebecca now. Yes, Frank Nijiri tells us the industrial. Hold on, I need to mute everybody because there's a bit of interference. So there's a feedback from Frank. He says that IR policy is a perfect plan to cut complexity of the industrial process by shifting the risk to a well-planned protect mechanism. Good one. Ruba Iza Vianney says IR policy protect institution organization from an extensive number of hazards under material damage, offering more cover than a typical fire policy and specified peril policy. Yeah, that's correct. It's all risk, so the coverage is very wide. Asrati explains to us that IR is a comprehensive insurance policy that incorporates fire loss of profit, theft, accidental damage cover. Yeah, it's a wider cover, but of course, along with that, you have to pay more for the coverage as well. So the terms and conditions are different, but it's an all risk cover. So it's a so Michael Nawaba from Nigeria Cornerstone, he says that IR is divided into 2 sections: property damage and business interruption. Yes, we will come to that, Michael. We will come to that. Meanwhile, Augustino says that comprehensive cover against fire, light peril, accidental damage, burglary, as well as business interruption. Yes, I think most of you understand what is covered in this policy, but allow me to continue. So thank you guys for your sharing. The subject itself is technical in nature with the usual insurance components. So that's what we'll be covering over these 2 days. That's what we'll be covering these 2 days, guys. So I look forward to hearing your respective comments and feedbacks as we go along. Okay, so why the need for insurance? Let's look at the technical aspects. I'm not sure whether you guys are familiar with the risk survey report and the loss adjuster report. What are the differences involved? What are the difference between the risk survey report and the loss adjuster report? So who's able to type in the chat group? Or maybe I can ask Michael Nwambo from Nigeria to speak to us from Cornerstone Insurance. Michael, are you able to speak to me, Michael? Michael, are you there?
Yes, I'm there. Good morning.
Hi, Michael. You want to introduce yourself again? Good morning, Michael.
My name is Michael Moba. I work for Cornerstone Insurance PLC here in Nigeria. Can you hear me?
Yeah, is that the bell for your break time?
Yeah. No. Yes, sir. My phone is ringing. Sorry about that.
Okay.
My phone was ringing.
Okay, no problem.
Okay.
Yeah, tell us the difference between the risk surveyor report and the loss adjuster report.
Okay, there's a great difference between. Can you hear me?
Yes.
Hello?
Yes, proceed. Sorry, proceed,
I didn't
Michael.
get the question. I didn't get the question very well.
No, the question is, what is the difference between the risk survey report and the loss adjuster report?
Okay, there's the difference between the risk service reports and the loss adjuster reports, that it has to do with the reports given by loss adjusters, to determine the amount they're supposed to pay to the clients for the loss that was the company incurred or the business incurred.
Okay.
Whereas the risk survey reports can actually lead to the report they're given to the risk adjusters for them to determine the amount or actual value of damages that was incurred in particular claim.
Yeah.
Did you get that?
Okay. All right. Thank you, Michael. Thank you for sharing. So basically, I'll just recap what Michael has tried to say. The risk surveyor report is undertaken prior to the policy being issued. It's to enable the underwriter to assess the exposure and to allocate the rating, the premium to be charged for a particular risk. Meanwhile, the loss adjuster report is used when there's a claim. When there's been a fire or there's been a flooding, then the loss adjuster will be involved and they put up a loss adjuster report. So these are the two items. We have a response here from Kati Geta. Kati Geta says risk service can also be done on renewal. Yeah, sometimes it's done on renewal. Diaz, Daisy, Brenda, Siwana says that this one is survey report highlights the improvement or to minimize or eliminate the possibility of the loss. Yeah. Meanwhile, there's a feedback from Tawfiq Abeesha. I think risk survey report is a pre-risk survey, correct? For underwriting, and loss adjuster report is for a claim purpose when the loss happens. So there's a two particular documents, guys. Please remember the risk survey report is before to enable underwriting to be done, while the loss adjuster report is after the loss took place. All right, so that's sort of the overall introduction on the two issues. So now we come to this situation where there's a building on fire. So this building on fire, okay, it could be a factory, it could be a copper processing factory, or it could be a building that is used at the mine. One of the warehouse at the mine caught fire. So what is the first step to tackle the fire? What is the first step? What is the first step to tackle the fire? Anybody want to tell me? First step to tackle the fire. First step when there is a fire. Do we call the insurance company? Do we call Clapton Re? Call the fire department. Yeah, thank you. Elizabeth Okumo says evacuate. And number 2, Grace Miwaya says call the fire department. Call the fire department, remove flammable objects immediately. Okay, thank you. Chinmaya Relan has given fire extinguishers, call the fire brigade. I mean, there's a lot of things to do, but I don't think you want to call the insurance companies yet. You can switch off the power circuit. Yeah, you can look at switching off the power circuit, but human lives are most important. Saving lives is essential in the first step. All right. So I just want to go back a bit. I want to go back to 2011. There was a big flooding situation in Asia. In 2011, there was a big drama in Asia. There was flooding in Bangkok. Bangkok is the capital of Thailand. So what happened was there was a severe flooding. So I just want to show you guys a little drama about what happened. So this is part of Bangkok. This is Bangkok, and this is the sea. Maybe I should mark sea in blue so you know this is the sea. This is the sea, and due to the heavy rain, there's a lot of water coming, and there's water coming from the rain. This is due to the rain. There's a rain situation. There's also high tide. So due to the combination of heavy rain, so this is heavy rain. Due to heavy rain and also due to the high tide, we have a situation of flooding in Bangkok. So what happened was Bangkok is flooded. So this is what happened. And the water remained stagnant for a few days. It was a few days and a lot of problems happened in this Bangkok situation. Does anybody know what happened in this case? What are the okay. So what happened in this case was the sum insured. One of the critical issues was the sum insured. Sum insured was the critical problem here. So later I will touch on the sum insured. The adequacy of sum insured is one of the critical points in handling this particular flooding at the project site. So I will relate it to our industrial all risk policy. The sum insured becomes very crucial. All right, so moving on, go back to my slide, and sum insured is important to consider. So the industries that will use the industrial all risk policy will typically be manufacturing, petrochemical, the petroleum industry, and also the mining and subsurface industries. Our focus today is more on the site mining and subsurface. So I've shared some information about that. And in the mining industry, the prevention and control of fire and explosion in mines become very critical. So this is a publication from the UK. It's published by the Health and Safety Executive. They have very appropriate guidelines in dealing with safety measures in the mining industries. So those of you who want to know more about safety in the mining industry can look at this particular publication by the Health and Safety Executive, HSE. So safety when visiting mines, what are the things you're looking at? You might be looking at wearing safety helmets, safety vests, and so on. So what is this called? These are called PPE. Now, what are PPE? What are PPE? Are you able to say what are PPE and what are the examples of PPE? Right, so I will tell you PPE stands for personal protection equipment. Personal protection equipment. So personal protection equipment will be items like safety boots, safety vest, helmet, safety helmet, and then we have masks. Sometimes you may even have goggles. You may have to wear safety harness. Okay, so and then you may have earplugs. So earplugs. Okay, so these are all elements which are referred to as PPE. These are PPE. So I'm just sharing a few points before we get back to our slide. All right, we get back to our slide. And some of the industry components like the regulator, the reinsurers, the insurance companies, insurance brokers, these are some of the components. And then we have the forensic accountants, forensic scientists. Now, forensic accountants are looking at the business interruption aspect, while forensic scientists are looking at the investigation. They're looking at the investigation, looking at the proximate cause. What triggered the fire? What triggered the flooding? Why did the machine fail? And then there are consulting engineers, there are other specialists like metallurgists who are involved. And the last one, of course, is salvage merchants. Salvage merchants Salvage merchants are looking at the damaged items. They will buy the damaged items and may repair it and sell it in another market. So these are called salvage merchants. Okay, these are all parties involved in insurance aspects. So I just want to run through the basic principles of insurance very briefly. Utmost good faith, you have to declare the full particulars about your risk. So if you're doing a tunnel, if you're doing a mine, what is the mine business? Is it a copper mine or is it an aluminum plant? Are they doing an open cast or is it a underground mining facility? So you got to declare the truthful information. Moving on, we have insurable interest. Who has insurable interest? It will be the mine owner. The mine owner has got interest in the particular mine. And then you may also have the financer, because the mine owner may have take financing from the Bank of Mozambique. So when they take financing from Bank of Mozambique, the bank has insurable interest. And moving on, we have the proximate cause. What's proximate cause? What triggered the damage? So okay, so then you have proximate cause. So you have proximate cause is what triggered the damage. So we have a variety of proximate cause to mention. We could have things happening like you may have a flood, you may have a fire, you may have explosion, you may have a landslide. These are things that can happen in a mine environment. So these are proximate cause. So these points are all considered as proximate cause. Who decides these proximate cause? These are investigated by the loss adjuster. Sometimes you'll have the forensic. You may get the forensic scientist. You might get the forensic scientist to investigate. Now, why is this so important? Why do we need to know the forensic? Why we need to know the cause? We need to know the cause because this has an implication on whether to pay or not to pay the claim. The second one is regarding the excess, because excess have got different excess. Sometimes for flooding, the excess is 100,000. For fire, the excess could be 50,000. So there are a variety of excess. And the last reason you need to know the proximate cause is regarding recovery. There is a recovery to consider. Recovery or subrogation. Subrogation, you're going after the culprit. So subrogation is going after the culprit. So that is why we need to know the cause. In this insurance principle, we need to know the proximate cause. That's a very important point to take note. Moving on, what are the other principles of insurance? We have subrogation, as I mentioned, recovery, going after in the copper smelting plant. If one of the suppliers who install a machine cause the fire to start, then there could be an opportunity of recovery against the supplier. The supplier could be from Japan or China or whatever. So there's a recovery prospect. And then you've got indemnity. Indemnity is to put you back to where you were prior to the loss. So the opposite of indemnity is reinstatement value clause. So I just need to mention the little difference between indemnity versus reinstatement value clause. So this is the policy allows this. The policy allows indemnity, but a lot of clients sometimes may buy this clause. This is RVC, and most likely they have to pay more. They have to pay more money for the reinstatement reinstatement value clause. So indemnity is all for all. You get back the value for the old machine. But when it comes to reinstatement value clause, the RVC clause, you get new for all. You get the new for all. But remember, there's a small catch. You do not get no improvement, no betterment. These are the two conditions under the reinstatement value clause. But please take note, guys, this is the basic coverage. This is the basic coverage. But if somebody wants this, it's possible, but they got to pay additional premium. So this is the difference between indemnity and reinstatement value clause. Okay. Moving on, there is a feedback. There is a feedback in the chat group. I recommend IR policy is best to cover on reinstatement basis. Yeah, correct, Florence. So that is something that you have to request the underwriter to consider, and then the underwriter will have a additional premium charge to cater for the reinstatement value. All yeah, Emmanuel says something. What did Emmanuel says? Yes, new for all. No, for new for all there will be no depreciation because you've already paid additional premium to cover for the RVC. Okay, so Latif says replacement versus reinstatement. So yeah, so we will talk more later on that. But for now, subrogation, indemnity, and let me just touch on this again. So indemnity is all for all. You get back. So for example, this is my phone, and the phone is 5 years old. So you will get back the value of a 5-year-old phone. But if you have a reinstatement value clause, you will get a new phone. You get a new phone, but it's the old model. It's the old model. You will not be eligible for the iPhone 13. You will only get the iPhone 10 features. If you get all the betterment and improvement, then there'll be some percentage reduction on the quantum. So that's what it means between reinstatement and indemnity. These are the 2 points to take note, guys. Moving on, the last one is contribution. Contribution is when there's more than one policy, there will be contribution from 2 policies. So example, this could come about when you have a situation with when you have 2 policies in place. So let's say you have this is the mine, you have the mine, and they have a IR policy. They have a IR policy which is worth USD 100 million. Okay, so this is a mine with 100 million. But what happened was one of the suppliers here also bought another machine, and they bought a separate all risk cover. All risk cover for this one machine with let's say is 1 million. So we assume that this 1 million is also taken care by the IAR policy, which is 100 million. And if, for example, if what happened is if there's a fire, let's say there's a fire here, and this machine is affected, this policy will respond, and this policy will also respond. Both the policies respond. So when both policies respond, what is the formula? This formula is basically contribution. And how do you share the items? How do you share it, guys? This is called independent liability calculations. Yeah, this is what it is. Independent liability calculation, where the claim, let's say the damage if the damage, for example, in this case, let's say the damage is $100,000, the $100,000 will be partly paid by this policy and partly paid by this policy. So this, both the policies will respond to cover for this loss because there's an overlap in coverage, and this overlap in coverage is called will recover the contribution will apply, the application of contribution, guys. All right, so that's what I want to say about contribution. There is a comment from Grace Miwaya. Doesn't reinstatement bring an element of betterment in buildings, for example? So when there is a betterment, if you're putting something better, you will apply depreciation. If you had a plastic window and now you're replacing it with a metal window, it's definitely a betterment. So it's not right. You will get back the value of the original plastic window. Does it mean both policy pay equally? No. Okanta, the answer is no. It's not equally. There's a formula, and the formula is it is prorated based on this wording which I'm showing you. Based on this wording which I'm showing you, what this independent liability and contribution means is that the loss is prorated according to sum insured. The loss is prorated according to the sum insured and the excess. So both the policies will be called, it is not 50-50. It's based on the sum insured and the excess clause. So the 100,000 is divided into two policies. So most likely, the big policy will pay the bigger amount and the small policy will pay the lesser amount. But both policy will have to pay. It's prorated between the two policies. Yes, Yaya Bamba is saying something there. Yes, I agree with Yaya Bamba to tell her that Yaya Bamba's comment is contribution calculated based on pro rata of sum insured each policy. Yeah, that's correct. And that is called independent liability calculation. So if you're not sure, if you go to Google, please go to Google and look for this. Look for this one. Please go to Google and look for independent liability calculation. So there are some good examples on Google. You can look at that. Okay. What policy has underestimated values? So if underestimated, then that is a issue of underinsurance. Average will apply. That's another story. Average is another story. Sometimes, Katigeta says that sometimes difficult because IR holder might not know the other contractor has covered. Yeah, that can happen. So it is a loss adjuster will do the investigation, guys. Don't worry. The loss adjuster will do inquiries to find out if there's any other policy, and this will then trigger both the policies. Okay, guys. So moving on. What I've just said, some general principles about insurance to understand. So let's just talk about loss prevention at mines. Okay. Somebody's got a cough. But I will reduce the mic. So just look at loss prevention at mic. Now there's a comment here from Grace regarding contribution. Is this done in practice if both policies are sitting with the same insurer? It should, because although you may have same insurer, but the insurer might have different reinsurers for a different reinsurer for the fire policy, a different reinsurer for the industrial all risk, or it could be a different insurance period, and different insurance period, it could have a different reinsurer on the program. So it depends. So Florence, you're right. Sorry, Grace. you must practice contribution because it's a principle of insurance. So although it's the same insurer, you might. Then there's a next question. There's a question from Florence. How do you determine to pay in the event claim when there's an overlap in policies? That's why you have to apply contribution. So when you say overlap of in policies, basically, I believe both cover the same loss. So in this case, which I gave just now, the machine was covered by the 100 million IAR plus the smaller fire policy taken up for the machine. So both the policies have to respond. Okay, so Florence, no problem. There's an overlap. That's why you have to apply contribution. So if you want to see the example, please go to independent liability calculation and you'll be able to understand. Now, I want to touch a bit on the loss prevention and mines. Before we dive into the actual subject, we want to go into the loss prevention of mine. So these are some of the concerns in the mining space. Firefighting features, lifting issues, lifting with cranes, lifting with mobile cranes, lifting with excavator or any sort of lifting exercise. Then you've got another thing, which is pipeline works, pipelines. They've got a lot of pipelines running, and sometimes the pipelines give way, and that could lead to erosion. Erosion could lead to a collapse. Conveyor belt systems could also break down, could also fail. Large tanks, processing plants, site security. You need to have security, a security system to ensure the site, the mining location is safe. These days, some of the mines, they use CCTV. I mean, in the old days, they need to have a manual workers walking around. I managed to go to the Masbate copper mine in Philippines, and over there they are using CCTV system to monitor the movement of the security and site safety concept. And the workers need to use their thumbprint for entering to the work site. So the thumbprint is used to monitor the workers and also for paying of salary and overtime. This is how it works. All right, not to forget the public liability exposure, because sometimes you may have third parties walking into the mine, and that could be another issue. So public liability exposure is another concern in the mining space. People who are beyond the worker. Now, I want to talk about tsunami. Tsunami is another concern, especially in areas which are exposed to the sea, the effect of the sea. Does anybody know the meaning of tsunami? What is the meaning of tsunami? Can you type the meaning of tsunami in the chat group? Okay, what is the meaning of tsunami? Meaning of tsunami. And is it covered in the meaning of tsunami? Is it covered by the IAR policy? Okay, what is the meaning of tsunami and is it covered in the IAR policy, guys? Yes, Sally Otinga says high sea wave. Yes, yes, yes. Is IAR covered by tsunami? Zulkifli says yes, yes, correct. Yes, Elizabeth says rising water. Hasnain Magji says yes, tsunami is high sea wave caused by earthquake or underwater. High sea wave caused by earthquake, isn't it extension? No, it's not an extension. It's covered. It's covered by the IAR policy. So let me explain to you how does this tsunami happen. First of all, I want to tell you this word tsunami comes from a Japanese word, which means giant waves, giant wave. So it is triggered by the earthquake. It is triggered by earthquake. Earthquake in the at the bottom of the sea, bottom of the sea. Okay, so this is how the tsunami is triggered. And this is covered by IAR. It is covered by IAR. So how does it happen? Let me draw a little sketch to show you how it happens. So this is the bottom of the sea. This is the beach. This is the beach. So somebody's got their house here. This is the house. And normally this is the water. This is the water. So here you have the normal wave here and so on. So this is the water. So this is the sea. So this is the sea. So below here, you have all the ground. This is the ground. So you have the ground. This is the ground below. So sometimes there's a different layers of material. Okay. So unfortunately, guess what? There was a earthquake. There was an earthquake below here. So what happens when it's an earthquake? This ground moves up, this ground comes down. When this happens, there's going to be a giant wave. Okay, so this is called the giant wave. So the giant waves comes like this, and it goes like this, and it damages the house. So this is damage to property, damage to the mine. Let's say there's a mine location there. So damage to the mine. So this is the damage to the mine that takes place due to the tsunami. So the approximate cause is actually the approximate cause is actually earthquake. The approximate cause is earthquake. Then the earthquake caused the tsunami to happen. So tsunami to happen. So the good news is IAR is covered. IAR is covered. Okay, IAR is covering this because it's a sudden, unforeseen physical loss or damage. So this earthquake is covered. All right. Do I have any questions about that? Oh, there has been some comments. So everybody talks about giant waves. Thanks, Moyanga. Tsunami is caused by earthquake. Yes, it's caused by act of God. Yeah, that's right. Zulkifli is correct. It's an act of God. So everybody is clear. Yeah, it's a natural peril, but it's covered. It's covered, but it's covered as long as the property is covered under all risk. It's a industrial all risk. So the warehouse next to the mine is the warehouse which is part of the mine is covered due to this tsunami. Okay, that's what I want to tell you. So I'm moving on. Where is our location? So this tsunami happened in 2004 in December 26, 2004. It happened in the Indian Ocean. So although it happened near Indonesia, but a lot of Sri Lanka, India, Thailand, Malaysia, Bangladesh was affected. But there was some effect to Seychelles, Maldives, and Somalia as well. So there was some effect as well due to the tsunami. So there is some effect. So Africa did suffer some things. Zambiwa, there's no additional cost for under IAR. Industrial all risk is a very wide cover. I told you earlier, it's an all risk cover. You don't need to specify one by one. Unlike the fire policy, you need to add on peril by peril. So this one is under the earthquake and volcanic action. So when you cover for this, you are going to pay. It's covered. IAR is covered. So I told you guys. So this is to cover. This is to respond to Sambiwa. I just want to tell Sambiwa, in case Sambiwa missed my explanation earlier, that under fire, so under peril-based policy, under peril-based policy, and then we have the all risk cover. So in this, for tsunami, you need to buy the earthquake and volcanic clause, volcanic endorsement. This is under fire policy. But when you come to policy, I better delete this, otherwise it might confuse you. Policy. But when it comes to all risk policy, under all risk, it covers all. That means it covers for tsunami, it covers for flood, it covers for fire. It's all risk. So you don't need to, it's all risk. But here, you must buy extra, so you must pay extra money. So all risk is covered all. It covers all. So including tsunami as well. Okay, guys. So I hope that is clear. Okay. So that is clear. Sambewa is clear about it. That's good. We will be breaking shortly for our break, and yeah, we will have a very interesting video clip to watch. This is by our event sponsor, which is Clapton Re. So just hold on, guys. Let me finish a few more slides before we take a break. So guys, let me get down to the slide, back to my slide. So here we are talking about the tsunami. We spoke about tsunami. Tsunami is covered in the industrial all risk. So historically, all those countries which are located around the ring of fire. So Indonesia, Philippines, Japan, New Zealand, parts of America, parts of the US, California, South America, Peru, Chile is exposed to the ring of fire. So the ring of fire, beware of the earthquake scenario. But Africa is a bit further away, so you have another sort of exposure to earthquake and tsunami related issues. All right. Now, fire risk surveys. Why you need to do fire risk surveys? I'm going to talk about that. There's a question about industrial. Namushi is asking a question about industrial special risk compared to IAR. And then there's another question from Jared asking whether IAR to a non-manufacturing concern. It is possible. There are buildings, large complex, they do go for IAR, but it depends on country to country. Certain countries have certain guidelines. Some countries limit the have a minimum premium requirement for minimum sum insured value for IAR. Some countries don't have regulation. It's a D-tariff market, so it's up to the underwriter to give the cover. But I know, like in Malaysia, to be eligible to be covered under IAR, the value of the risk must be 300 million ringgit. That is the Malaysian currency. So different countries may have different requirements. In Singapore, no problem. You can buy IAR even for a smaller 100 million property. But sometimes underwriters, the company, they have different requirement for the value. Now, regarding IR and ISR, again, the product name varies, but in Australia, the product is called ISR, okay? So I just want to tell you, in Australia, so clear this, okay. So Zulkifli has mentioned that there's a 500,000 Bangladesh currency to buy this. So it's 5.5 million. So USD 5.5 million. So there's a minimum requirement. Now there is a question here. Can IR all risk cover all risk covered, excluding in the policy, unless specially excluded? Yes, correct. Alpin, you're right. It's all risk cover. It covers unless excluded. So in Australian market, in Australia, those of you are wondering, in Australia, they have very special terms. In the world, in the rest of the world, so rest of the world, and we are comparing with Australia. So here we call it the IAR, then we call it a CAR, you know. But in Australia, they call it, in Australia, the term used is called industrial special risk. Industrial special risk. So that's why it's called ISR. For CAR, they call it, for CAR, it's called construction insurance and third-party cover. Third-party insurance. Okay, do you know why is that? Because in Australia, they do not, the consumer association do not allow you to use the term all risk. That's why they have to use the term construction insurance. They use the term industrial special risk, but the coverage is about the same. It's the same CAR policy, or it's the same industrial all risk. It's just that the terminology, they don't call it all risk. They call it industrial special risk. So that's a sort of difference. So I hope that is clear about the difference of special risk. So Namushi asked the question. I hope Namushi is clear. Namushi, where did you hear this question, Namushi? Are you able to come to the mic, Namushi? Namushi? Are you able to come to the mic?
Hi.
Hi, Namushi.
Hi, this is Namushi.
Where are you located?
I'm in Zambia.
Zambia. So you came across the
Yes.
industrial special risk.
Yes. So on some of the policies that we get to see from the loss adjusting side, some policies have industrial special risks and others have industrial or risks. So I was just wondering, you know, the difference and why that's the case. Because there's in certain cases you have industrial special risk. I'm looking at one client's cover, which is one policy is industrial special risks, then the very next policy is all risks. So
but can you tell me which country is the risk located, the special risk?
In Zambia.
It's in Zambia?
Yeah.
Okay. So perhaps local underwriters choose to call it something. Do you want to call this a pen or you want to call it a pencil? It doesn't matter, it writes. So some people call it a magic pen, some people call it a pen, some people call it a pencil, some people call it a writing device. So, but the intention is the same. I can write my notes with this device. It's a pen. Is that okay? Is that okay, Namushi? Thank you. Thank you. Thanks a lot. So, yeah, so Zambiwa asked a question, chemistry breakdown section be incorporated in both asset all risk and industrial all risk. So these are very much local arrangements. There are some markets in Africa, they do not use the word industrial all risk, they call it asset all risk. So the structure is a bit different, but basically it covers for property. So under the property policy, it's quite normal to extend to cover for MB. There is an allowance to allow for the MB component. So there's an allowance to cover MB. Please note that the MB is an internal policy. It covers for internal damage. The machine itself fails. while industrial all risk is mainly from external factors. External factors, for example, there's some flooding from outside, there's a aircraft crashing into the building, into the mine. There is a tsunami happening, and the tsunami damaged the warehouse. All these external factors. Machinery breakdown are internal factors. So that's the difference between the industrial all risk with MD. But it's quite common to join it together. Okay. So now where do we have? What's my next slide? Yeah, I'm going to go into the fire risk survey. But before I go to fire risk survey, guess what, guys? It's coming to 11 o'clock, the time in Zambia, and we are going to have our tea break. So the tea break is going to be 15 minutes, and please be back at 11:15. So please be back, guys. Please be back at 11:15. And here we have a video recording about our Clapton reinsurance company. It's a video clip. Over to you, Clapton Re, and I see you guys back at 11:15. 11:15. Okay, thank you.
On the 1st of October 2021, with a vision of being the preferred provider of reinsurance services. Our mission is to provide reinsurance services to the industry with innovative underwriting and prudent risk management for the benefit of our customers. Our story began in 2005 with the incorporation of Clapton Insurance Company that provides both insurance and reinsurance services. Supported by 3 strategic hubs located in Kenya, Côte d'Ivoire and Israel. It's from this background that Clapton Reinsurance Limited was formed to focus specifically on reinsurance as a separate autonomous entity headquartered in our new office building in Zambia. We inherit a considerable portfolio of more than $35 million from KIC and capital of $3.5 million with a clear intention to increase this in the future. Clapton Re is owned by UK and Israel-based investors that have been in the industry for over 40 years. Our well-staffed team in Lusaka bring a considerable wealth of experience and diverse business exposure from corporate governance to business management and technical applications. We pride in having all the professional skill sets all under one roof to achieve a one-stop capability. Clapton Re brings local reinsurance capacity to our markets with a uniquely flexible proposition due to our underwriting technology. This allows us to offer a wide range of agile reinsurance products and an excellent customer experience. We take on risks that range from fire, engineering, energy, marine and aviation, to specialized liability, casualty, and motor reinsurance. Clapton Re will write business across our footprint in Zambia and the rest of Africa, Asia, Central and Southern America. Our key values of knowledge, long-term, accountability, proactivity, and togetherness guide the way we do things to ensure we fulfill our vision, mission, and objectives. With a strong underwriting philosophy, Clapton Re bring to you a partnership that provides reliable reinsurance capacity and prompt settlement of valid claims. We're here for you.
Hi guys, hope your break was good, and I managed to make myself a cup of tea. And before we resume the class, there was one question about the difference between the MB and IAR, MB and IAR. So allow me just to mention this here. Here I was just comparing between the rest of the world and IAR in terms of this title of ISR, Industrial Special Risk Policy. So IAR is in Australia, they call it ISR. In fact, they got some terms, they call it the Mark 5. They call it the Mark 5 policy. There's a very specialized wording for property. It's like a property or risk, but the title is called Industrial Special Risk. But I think in your Zambian market, they might just call it Industrial Special Risk. It's just the title of it. CAR, most of the countries we call it CAR, but in Australia, you cannot call contractor all risk. You cannot call the word all risk, so you call it construction insurance and third-party insurance. So that's what I want to mention. And now there's a question. There was somebody missed out the. Are we all back in class 410? Okay. Somebody asked, what's the difference between IAR and the MB cover? So MB and IR, if you want to compare these two, basically IR covers the entire property mainly from external perils. External perils is external perils. Okay. IR is external perils. MB is internal. It's internal. It could be. It basically is the breakdown of the machine. Breakdown of the machine. So this is the. Most of the time, the IR policy will be the entire complex. This is the entire complex. While MB will be for specific machines. So specific machines means number 4, number 6, and number 9 only. So that's the sort of the difference. So this is from external perils. External perils could be stuff like flood, fire, it could be lightning damage, lightning damage. While these are all internal issues, these are all internal issues. All right, guys. So this is sort of the overview of the policy. Okay, there are some peculiar differences in terms of MB. We will talk about that when we go into that subject tomorrow. Okay, guys. So I will stop that part. Let's see whether you have any more other questions. Another question. Okay, Mumba Ngoma has got a question. Mumba, do you want to subsurface industry? So Elizabeth, I will say, the mine. Some mines are the open mines, so the mining facilities, and then you may have things like a little workshop nearby. You may have a warehouse nearby where they process the material. So those are the machines. Those are the main facility. Then the machines in there, the grinder, the breaker machines. Those are machines, and you buy an MB policy for those items. Those are the items that you'll buy the detailed MB policy for the specific grinder and the breaker. You will buy those machinery breakdown policy. Okay. Yeah. Thanks, Mumba. Mumba has got a question. Yeah. Thanks. Got it. So now we get back to our slides. Let's get back to our slides. we just wanted to look at the fire risk surveys. Why you need to do a fire risk survey? This is a typical risk survey that we did for it's a paper mill. So we did a survey. So when we do a survey, we are looking at the facilities. So you will have a similar firefighting room in some of the larger mines. You may have a fire pump room. So you want to inspect and see the condition of these machines. Okay. So yeah. Okay. There are two questions. Florence asked the question, what are the sections in the IAR? Okay, no problem, Florence. I will take your question. Basically, the IAR has got two sections. Where can I draw that? So the IAR has got two sections. What are the two sections? I will tell you now. You've got section 1, which is covering the material damage, and then you've got section 2 covering for business interruption. Now, what happens is sometimes they include the the MB, they include the MB here. So it's included. So it's an extension. They extend to cover the MB here, and they put a sub limit. Maybe they put 500,000. Yeah, 500,000. 500,000 is MB. So it is possible to extend the IAR and include an MB. Or it could be an MB standalone. It's also possible to have a MB standalone. It depends on the arrangement. All right, listen guys, you can have IAR section 1, section 2, material damage and business interruption. And it's possible to insert the MB policy under section 1. That's what happens. Okay, so yeah, so Mumbai is right. ISR has MB, that's fine. Yes, IR also has MB in it, but it's optional. Some people don't want to buy it because, and some underwriters may not give MB because MB is a high exposure policy. A lot of things can happen at the factory. The machine can break down and insurer have to pay. So some underwriters do not want to give MB cover because of the high risk, high exposure. Maybe they're unable to do a risk survey. Maybe they're not satisfied with the risk management procedure at the factory or the mine. Maybe there isn't any repair facilities. Maybe there isn't any mechanics or technician to do the repairs at the mine. So underwriter may not give the MB policy. Underwriter just give the IAR. Okay, so moving on back to our slide. So I was trying to show you the fire pump room. So during the survey, the underwriter will inspect, the risk surveyor will look it up and put up a report. They will put up a report. They will check that the fire pump room have got meter, they're in good condition, well maintained. Is the motor is on the on position. And then we also want to test the hydrant. We want to test the hydrant. So this is a typical testing of the hydrant to see whether the hydrant is working. You're welcome, Mumba. Thank you for asking, Mumba. So this is the hydrant. They're testing the hydrant to see whether it's working. Okay, Emmanuel is asking if the MB is extended for IR cover, should it be charged or given free? Okay, given whether it's extended or given free is up to the underwriter. Some underwriters may build it into the rates. Some may say it's a separate item, additional charge. It depends on underwriter to underwriter. And whether there's a limit, yes, of course, because MB cannot be unlimited. It's got to be a specified amount, maybe 200,000 US or maybe 1 million MB cover. There will be a limit. So it's up to the underwriter concerned to consider the risk exposure, see what is the request and allocate the appropriate amount to insure the MB. Industrial all risk, the sum insured is based on the property. You have 2 warehouses, 1 open cast yard and 1 metal processing area. So that's how the value is worked. Now, Gideon is saying on the MB array can be applied on the limit for additional period. Yeah, I suppose you can. You have various ways of working out. Oh my God, there's another question from Janita. I know Janita from Mauritius. Surrounding property. Okay, so Janita says on the basis the MB covers internal causes of loss, how will you cover damage to masonry which the machinery be built in if the proximate cause is an internal explosion? I thought about surrounding property limit, but still does not make sense as a machinery attached to masonry is not a surrounding property. Okay, you're getting into details, Janita. Maybe tomorrow if we have time, we will look at some more appropriate example. I understand the masonry damage could be serious as well, but I would have thought that when you insure that machine, it should include the masonry. Isn't the masonry part of that particular machine? So there could be a consideration on that as well, whether that particular machine and masonry are together. Okay. All right. So guys, we're looking at the pump. These are some of the sprinkler heads. You might have some modern mining facility with sprinkler. Maybe they have a permanent warehouse structure, and the warehouse structure may have sprinkler system, and then there's also form discharge. Now, form discharge. William's asking what is AAR. Please spell out AAR. Okay, William, please spell out AAR, then I talk to you. What is foam discharge? Foam discharge is used like in the aviation industry. In the aviation industry, they use the foam fire suppression system to control damage to the property. Now, you might have a mine that's got some very expensive mechanical or machinery being used. So they can propose a foam discharge, because foam discharge does not cause damage to the machines. If you use the conventional sprinkler, the moment the sprinkler comes on, it's going to cause water damage to the machine. So to avoid that, foam discharge is a good choice. Foam discharge is a good choice. So think about it. Think about using foam discharge. Okay. Please think about using foam discharge as an alternative, but it costs some amount of money. Asset all risk. Okay, same. Asset all risk would be some sort of IAR, but I like to see the policy. Can you tell me if AAR got how many sections? Do you know the sections in the AAR? Please describe, William, just describe the sections in AAR, then we can talk. Sometimes it's the name of the product, but the coverage could be the same, Okay, moving on, let's dive further into the industrial all risk policy. Let's get into the industrial all risk policy. Now that is a product that we are talking about, industrial all risk, and industrial all risk policy has got two sections. We got section 1 and section 2. We have section 1 and section 2. Section 1 is the property damage, and section 2 is the business interruption. All right, so these are the main two elements. Okay, so MD Mumba has pointed out AAR as MD and BI. So machinery breakdown is always an extension. Please note, machinery breakdown is always an extension. It's an extension, okay? It's an extension. Okay, some of the remarks on IAR policy, it could be on ABI or Munich Re wordings. ABI or Munich Re wordings. I agree with William on his point. Yes, William, I agree with you. MB is an extension. It depends on the market, you know, different parts of Africa. Some parts may accept MB cover as an extension. Somebody else may not accept it because of the risk management consideration, the repairs, and how they manage the plant. Okay, I'm going to ask everybody, what does ABI stand for? Who knows what does ABI stand for? ABI or Munich Re? So what's ABI, guys? What's ABI wordings? Anybody can tell me in the chat? So what is ABI? ABI stands for? Yes, Janita. Janita is familiar with that. Thank you, Janita. How's the situation in Mauritius? Yeah, Zulkifli, by the way, the answer is right. Collins and Janita already said that. ABI, Association of British Insurers, that's correct. Abovela, thanks for answering. Zulkifli says that MB is Section 3. It depends. I mean, you may want to put it under Section 3, but sometimes it's just an endorsement. It's an endorsement under Section 1. Okay, more so as an endorsement in Section 1. Section 1 is material damage under more so MB as an endorsement in Section 1. Okay, so same here. Okay, everybody knows Association of British Insurers. So you have the Munich Re wording or you have the ABI wording, Association of British Insurers, or you have a combination in other reasons, different names. All risk cover is very wide. You have, but subject to exclusions. You have property all risk, you have commercial all risk, you have combined all risk, comprehensive all risk. These are all a variety of titles. And we also realize in Australia, they call it industrial special risk. They sometimes come up with manuscript wordings with definitions as well. So it all depends on the type of coverage. It all depends on the type of coverage. Okay, so now I've got a question here. Can you suggest another industry or plant that requires IAR-MD cover? I just want everybody to type in the chat group another industry or plant besides marine. Besides the mining and subsurface. Can you type suggest some industry? Can you type your answer in the chat group? Yep. So I leave you all to type in some answers. I've got some answers. Foam industry, steel, medical labs. Yeah, you can have industry, sugar, edible oil, power plant. Yep, that's good. That's good. Agriculture, geothermal plant, manufacturing, breweries. Yep, industries, hydro or thermal plants. Okay, that's good. But construction, not for construction side. It must be completed. It must be completed risk. Even a hotel, if it's a big property, you can go for that. A port as well, yeah. So you have many such industries. So thank you everybody for their answers. Thank you. Brewery, yes. Thanks all for your answers. Let's go to the next question. Next question is, what's my next question? Does it need Section 2 and why? Okay, who wants to give me the answer for that? Does it need Section 2? What is Section 2? What is Section 2, guys? Section 2 is BI, yes. Section 2. Chinmaya, Relan. So you've got BI, business interruption. Yeah. So this is to cover the financial loss. So this is to cover the financial loss, to cover the financial loss, disruption. Remember, there must be a valid section. There must be a valid section 1 loss. There must be a valid section 1 loss. There must be a valid section 1 loss. Then the section 2 will trigger. So section 2 is business interruption, guys. Section 2 is business interruption. Okay, that's done. Then I've got another question here. We have a aluminum smelting plant. What policies would you recommend they buy? Okay, what policies would you ask them to buy? So Elizabeth says, yes, business interruption cost, it may halt the income. Section 2 is BI to cover any loss, that's fine. Okay, so what policy should these people buy? It's an aluminum smelting plant. Aluminum smelting plant, what policy should they buy? Yes. I think Brian has said this well. IAR, PL, MB, employees liability. Yeah, you may want to buy MB, MBLOP, but I'm not sure whether the underwriter is going to give MBLOP. Yes, I prefer Chipera's answer, which I think is more adequate for now. CGL, non-damage BI cover extension. I think that's a bit too much, Latif. I don't believe underwriter is willing to give that cover. Let me just ask Latif to speak to me. Latif, you want to open the mic, Latif? Latif, you want to open the mic? So I think the most appropriate policy will be the IAR with MB. IAR with MB policy is most appropriate because you got a BI and you also have the MB policy. That's most appropriate and in line with today's class. In line with today's class. So let me just say that again. I am saying that the most ideal product for okay. The most ideal policy would be for this smelting plant. Okay, we're talking about the smelting plant. The most ideal policy will be IAR, which has section 1 and 2. Then you also add the MB extension. MB extension under section 1. That should be the cover for this smelting plant. We don't want to talk about workman compensation and cyber and so on. That's a different topic for another day. But I think this is the best because if you just buy fire, it's not good because it's a limited perils. It's a limited perils, and then you have to add all you need to add more perils. So this is not the right policy. Unless it's a small factory, then maybe you can go for fire. But this is the best one. It's all risk. It covers all the perils. It covers all the perils. So thank you all. Yeah, you can also add public liability and so on, but that's not our concern. Now is Latif able to come to the mic? Latif, are you there? Latif, are you able to come to the mic? Latif, are you able to come to the mic? Latif, are you there? Latif is not coming to the mic. So Latif is not coming to the mic. Then I get back to the slides. I'm going to the slides and we spoke about class activity B. let's go to the class activity C. Okay, here the question is how to cover the plant completed under phase 1 during phase 2 construction. How to cover the plant completed under phase 1 when they're having the phase 2 construction. Now this is interesting. Okay, so what happened here is we have a mine here. This is the mine. This is the mine which is completed. So they have an existing building. Wait a minute, let me draw this with a different color to show this is the warehouse structure. This is the warehouse. Okay, this is completed under phase 1. They completed this under phase 1, and now because the business is doing good, they want to proceed to build phase 2. So phase 2 is going to come up here. This is phase 2 of the mine, phase 2 of the building. So they're going to build phase 2. Oh, sorry, I better draw this with dotted line to show that this is under construction. So this is the phase 2. This is under phase 2. This is under phase 2. So now they're going to do the construction of this, and they are going to construct this using the tower crane. You know, they have the tower crane and so on. So the tower crane is here doing the work. So how do we cover phase 2 in this case? How do you handle this, guys? The question is, let's go back to the question. The question is how to cover plant completed under phase 1 under phase 2 construction. Yeah, under phase 2. So plant is already completed under phase 1, but now phase 2 construction has started. Okay, guys. So who's going to tell me the answer? How are you going to take care of this? Janita from Mauritius has got it again. PEP to be included under the CR policy. Yeah, that's correct. So that was the answer I'm looking for. Thank you, Janita, for answering that question. So although the phase 1, please note, guys, please note here for phase 1, they have already the IAR. They have the IAR. Okay. But when this starts, they start this with the CAR. But what they need to do is they need to add the PEP element. So what is PEP? PEP is the principal's existing property. So while doing this work, let's say while doing this work, something fell down from the tower crane and it damaged this structure. This is a completed structure. And the IAR will not pay because this is due to the works by the contractor. So this is where the PEP element comes in. The PEP element is principal's existing property. So the answer is principals. I try and put it in a different color so you guys know what does PEP stand for. Principal's existing property. This should be the answer. You need to add this. And normally it's on a first loss basis. First loss basis. It's not on the full value. So it's on a first loss basis. Quite normal to put it under first loss. Okay. Although we're talking about IAR today, I just want to warn you about the construction of phase 2 and what you should do for that. Okay, guys. Thanks, Janita, for that. Let's get back to our slide, and so we've covered. Excuse me. We've covered this activity C, and then now we can go on to the next one: review of the policy and the jacket. Okay, so the industrial all risk policy has got a jacket and a schedule. Jacket is a standard wordings following the Munich Re or maybe following the Association of British Insurance Verdicts, and then the schedule. The schedule is meant for that mine, the mine which is located in South Africa, located in near 100 kilometers from Johannesburg. So the schedule is for that, and then they put down the value and so on. So moving on, let's see what's in the schedule. So in the schedule, you have the company, the business. It's a mining business. The location is in on what particular highway in Johannesburg, and the location of the risk. They've got a warehouse, they got the mine, and then the value, the sum insured. Who decides on the sum insured? Is it the broker, or is it the insurer, or the reinsurer, or is it the insured? Who decides on the insured, property insured? Who decides on the insured? So there's some answers coming in. Marion said insured. Said Zaruman Joel said insured. Okay, everybody is clear. Pinch also said insured. Said also said insured. Yeah. That's good. That's good. So the broker or the insurer doesn't decide on that. The value is decided by the insured. But of course, the insured needs to look extra. Yeah, Nicholas, you're right. Extra premium for PEP. It should be extra premium because the value, there is a value to consider. No, Elizabeth, is not the insurer. It's the insured. It's the insured who decides on the sum insured. And normally the insured needs to get a valuation done. So normally there is a basis of arriving at this. So you need to get a valuation report. This is ideal. You need to get a valuation report, or you get the annual report that gives the value, that states the value of the building and the machines and so on. And this should be done on an annual or maybe every 2 to 3 years basis. It must be done regularly. I will talk more about this point after this. I've got another slide on valuation. Latif's mic is not working. Okay, so Joseph got it right as insured. So everybody is okay. Yeah, mechanical reports applicable to determine the estimated value. Yeah, definitely. Yeah, you can. You got various sources of establishing the value. Okay, let's get back to my slides. And where are my slides? Okay, here we are. Okay, now yeah, so that is sum insured. Then total sum insured. What is the total sum insured? The deductible, the premium, the special clauses. So these are stated in the schedule. So now we need to work out the value at risk. The value of risk is quite a sensitive issue. We need to work out the value at risk. How to work out the value at risk? Okay, there are some challenges in facing that, because I got a few slides. Sometimes the equipment could be new. If it's new, no problem. You just take it from the invoice because you just bought it from the supplier. You can take it from the supplier, but otherwise quite not so easy. Okay, then invoice, you include the freight charges, the total transport, the tax. You can seek market value, book value, auditor's report, annual report. There are various sources of getting this the value at risk. Unable to see the screen. Hold on. What happened? Yeah, guys, can you see my screen?
Not yet, Pooba.
Hold on. We have an emergency. Let me see why we are not getting to see the screen. How about now? Can you see the screen? No. Can you see me, guys? Maureen, can you see me?
Yes, you can see.
Yes, we can see you.
Yes, we can see you. We can see you. You cannot see the screen. We can see you.
Okay, thank you. Thank
Yes,
you.
you can see.
And now, can you see my slide?
Nothing. Oh, we
Oh,
can't
no.
see.
Okay. Maureen, I need to step out and I'll come back. Maureen?
No, we can't see.
Yeah, Maureen, I'm going to step out.
Okay, okay, you can log out and come back in. That's okay.
I'll come back in a minute. I'm coming back in a minute.
Okay. Sasa hawa nitaplay nini?
Hi, guys. Can you all hear me?
Yes.
Okay, that's good. So I'm going to share my screen again. Can you see my screen now?
Yes, we can see it.
Yes.
Oh, great,
Yes.
great.
That's it.
This was a small break for me because, you know.
Kindly unmute, Pooba.
Yeah, you need to let me be co-host, Maureen. Please make me
Yes.
co-host.
In a minute.
Yeah, sure. So guys, I took a 2 minutes break. I stepped out, you know, just to have some fresh air, and then I'm back again. So thank you for your patience. Sorry for the inconvenience, guys. And I'm back again. So we're talking about the equipment here. Okay, everybody can see me now. Good, good, good. Thank you, guys. Thank you for your support. So you look at the invoice and you agree on the figure. You can also seek market value, book value, yeah. A point valuer. Okay, so like in Singapore and this part of Asia, we use John Ford. I'm not sure whether you guys have used John Ford. They are a valuation company. You can also go to equipment suppliers to do the valuation for you, or reseller, or you can ask industry contacts in the value. So repairers and suppliers can also give you indicative figures, of the cost to repair, or to the value to insure the items. What are the other options? Anybody want to guess? What are the other options to establish the value at risk? Anybody else got any ideas? What would you do? Joseph Kibet, what would you do? Surprise, surprise. My other option is Google. You can also ask Google for the value of the machine. But this, as insurers, as cedents, you can use the Google as a backup to validate the information given by the insured or given by the broker on behalf of the insured. So you can validify the value. All right. Because if you don't insure the right value, then there's a problem. Now, sometimes the machine is part of another machine. Then, yeah, surveyor's estimation is possible. Market value is one of it. So thank you, Joseph. Thank you, Taufik, for your suggested answers. Now, moving on, we have parts from a different supplier. Sometimes you have German part, French part coming in, so you have a problem. Yeah, you can, Rebecca is right, you can engage a local valuation company. Yeah, that's fine. You can appoint a local valuation company. But sometimes what happens is you may have a bunch of different machines of different suppliers. So if you have a warehouse, this is the warehouse, and this is the mine. Okay, if you have the mine here, so the mine is here, and you have the adjacent warehouse, or maybe it's the plant. Okay, so you may find that the conveyor systems comes from the mine. It comes from here, then it goes into different parts. They are going through a different conveyor system. So each of these is under a different make. So this is the conveyor system. So what happens is the conveyor. Okay, the conveyor system. Conveyor is made in Spain. Then step one, this one is made in Brazil. This one is made in Japan. So the next part is made in the USA, and one more part, the packing one, is made in China. So you have a combination of parts. So this one becomes a challenge. Again, is for the insured to work it out. It's for the insured to work out the value at risk, and you are supposed to look at it and accept it as the valuation for this particular machine. Okay, continuing with that, what else do we have? We have the sometimes it will be partly new, partly refurbished. Then you have a second-hand part as well. So these are some of the challenges in working. So different factors to consider. Then in conclusion, this very subjective area, let the insured work out and establish the figure. And the basis of the workings to keep in the file. You must keep it in the file because you need to refer to it. You need to refer to it at the next stage. In the case of claim, adjuster will do their checking and assessment. They may be disputed or reviewed later. So very important, guys, you need to check the value. You need to put it in the file in case there's a dispute later on how the value at risk was worked out. So quantum would be reduced with the application of average. So you know what happens in case of you know how average works. Okay, so average. So this is the example how it works. Example on under insurance. Okay, what happens is how. Okay, let's see how the under insurance applies. Okay, how the under insurance applies. So for example, the policy insures the value at USD 10 million. Okay, but adjuster says value at risk is actually more. What is the value? The adjuster says it's 100 million. We have a big problem here because policy is saying 10 million, but adjuster said says more. So what is the difference? This is say it's a grinding. It's a grinding machine at a mine. Okay, it's a grinding machine. The policy says the value is 10 million, but adjuster said 100 million. And then the loss, let's say the loss is 400,000 USD. So what happens? So when it comes to the loss, so due to average, what happens? This claim is going to be reduced 400,000 times 400,000 times 10 divided by 100. So So how much does he get? He only gets 40,000. This is the amount he gets. He only gets USD 40,000 because it's underinsured. It's underinsured, guys. So this is an example for. This is an example I'm trying to tell you about underinsurance because they've only paid premium based on this. By right, it should be based on 100 million. Okay, I'm just giving you an example. So MacWeb Bondera says, as a broker, underwriter, it's my duty to ensure insurance adequately insured. Yeah, of course. Yes, Rubaiza, I have applied the average clause. Yes, correct. I've applied the average. It's a simplified example. The loss is 400,000, but because of the average, we only will pay a claim of 40,000. Although the claim is 400,000, we will apply average. This is average. This is average. Edita, are you familiar with this? Do you do this? Edit. Miss Edit.
Yes.
Yeah.
Okay. That's a question I'm going to ask you. Does the average clause provision apply to the IAR policy? Because it's important part of the IAR policy.
Yeah, but you see, I mean, it's a principle of insurance. It's one of the principle of general insurance that you must be adequately insured. So if under insurance, then average will apply.
Yeah. Because frequent experience here is applied in the standard fire insurance policy. So it's the same with IAR.
Same with IAR.
Yeah.
So there's a comment here from Bola. Bola says, oh, thanks, Edith. There's a question from Bola. What happens in partial loss? So the above is partial loss. The above example which I have shown is a partial loss. So basically, if it's partial loss, it can be repaired, it must be repaired. So if it's partial loss, we repair it. We look at the repair cost. If it's total loss, we are looking at reinstatement, putting back to where you were prior to the loss. In both situations, the average clause will apply. So yeah. Okay, guys. Thank you. Okay, moving on. So that's an example to share with you guys. And then now I have to go back to my slide and look at the average. So this is the average. So the policy provision, sum insured. If sum insured is inadequate, loss will be proportionately reduced. That's what it is. Loss will be proportionally reduced. And moving on, basis of indemnity, it can be repaired. Insurers will pay for the repair cost. If it's going to be totally destroyed, insurers will pay the cost to the value immediately before the loss. That's what it is. So that's what it is. It's a basis of indemnity to put you back to where you were. So very important to have the reinstatement value clause. That is good, but of course sometimes underwriters don't want to give. So maybe in Africa, underwriters are not so bold to give the reinstatement value clause. The premium charges may not be high enough, so you don't get RVC. So it's indemnity. So if it's indemnity, you get all for all value, all for all. You don't get a new item. All right, all for all. Now let's go down to number 4. We're going down to chapter number 4 in our session today. We go down to coverage and clauses. We're going to look at the clauses under the IAR policy. So in the IAR policy, suffer any unforeseen and sudden physical loss, destruction or damage other than an excluded clause. So this is the wording. This is the wording which is given. Is there any limit which Chinmaya is asking a question? Chinmaya. The question is there any limit which the insured needs to carry out the reinstatement? Normally under RVC, they have to incur the cost and reinstate it within 12 months. Normally, within 12 months. The reinstatement must be done within 12 months to be eligible to the benefit of RVC. If you don't do it within 12 months, then you don't get the benefit of RVC. In fact, there's an implication on the BI aspect as well, because if you don't bother to repair, then the BI, business interruption, is running more and more. So that's another issue as well. But that's another story and for further discussion. Okay, so this is one of the examples for wording. Sometimes you have another wording like any sudden unforeseen event. Again, as I told you, Munich Re has different wording. Association of British Insurers got different wording. So it depends what is chosen. But whatever it is, talking about sudden unforeseen. Sudden unforeseen. It's not the gradual sort of damage. That will not be covered. Gradual will not be covered. Okay. So is it all covered, guys? Is it all covered? No. What is excluded? There is some exclusion. There is some variance in the exclusion as well, because the IAR policy, there's a lot of variety of it, and sometimes different cedants give different type of cover. So reinsurers will look at it. They might put some guidelines. They might put some terms and condition on it. So IAR is very subjective. The wordings can vary from company to company. It can vary. Okay. So there could be variance. Some of the exclusions. Okay. Now we go down to exclusions under this policy. The exclusions include defective design, material, workmanship. Zulkifli is asking, should we charge premium for reinstated sum insured? Again, that's up to your company policy, Mr. Zul. It depends on your company policy. Generally, reinstatement sum insured is better than the other option, which is indemnity. So you should charge more. You should charge more. You should. But it's your company policy. Okay, so these are the exclusions. Why is it exclusion? Because the factory owner or the mine owner should have got an expert to do it. So they cannot make a sloppy design and expect underwriter to pay for this, because they should take care of it. All right, so this is one example. Inherent defect is not covered. Inherent defect. So what is inherent defect? Is an existing condition. So for example, the mine has a problem because it's got a leaking slope. It's got a leaking wall. There's water coming through the wall. The problem is there from day one. Then the policy will not pay, because it is not sudden, unforeseen. It is happening for a long time. So policy will not pay for that. Okay, guys, the policy will not pay for that because it's ongoing for a long time. Okay, so that's inherent defect. Then gradual deterioration. Gradual deterioration happening slowly. Policy won't pay because we're looking for sudden, unforeseen. By nature of subject matter. What is Yebetal trying to ask me? Can you please talk to me, Yebetal? Yebetal, can you talk to me? Yebetal? Yebetal, are you there? Hi, Yebetal.
Hi, hello.
Hi, Yebetal.
Yes.
Where are you located? Where are you located?
I'm giving the definition of inherent defect.
Oh, okay. Inherent defect. Yeah. It's a nature of subject matter. Yeah. Correct. Thank you.
Sorry.
Where are you located?
I'm from Ethiopia. Ethiopia.
Yeah, very good.
Yeah.
Nice to meet you. Are you in Addis Ababa?
Yes.
All right. See you, my friend. Thank you.
Sorry.
No problem. Okay, that's our friend Yebetal from Addis Ababa. He was clarifying on inherent defect. Gradual deterioration is something happening slowly. Deformation is, the material is bending slowly. It's happening slowly. So whatever which is happening slowly will not be covered in the policy. Generally, it must be sudden, unforeseen physical loss or damage. Wear and tear, not covered. Collapse and cracking of building will not be covered, because you should have a good building in the first place. So you need to have a good building in the first place. You need to have a warehouse or a structure which was designed properly. Corrosion, rust, and changes in temperature. These are happening slowly, and the policy will not pay for this. These are happening slowly. The policy will not pay for this, okay? The policy will not pay for this. Fungus, shrinkage, action of light, policy will not pay. These are all happening over a period of time, policy won't pay. Vermin and insects, again, the policy will not pay. What should the mine owner do about vermin and insects? Inherent defects, inherent defect will be pre-existing condition, okay? Inherent defect. I just repeat what I was trying to say just now. You asked about inherent defect. So inherent defect, I will say it's pre-existing condition. It's a pre-existing condition. So this inherent defect. So these kind of things, it is already there, already there. So policy will not pay. Policy will not pay. It's an exclusion. It's an exclusion. Exclusion. Yeah, it's an exclusion, guys. It's not covered. All right. Does that help? I hope that's clear. What should a minimum excess under BI? It depends. It could be 1 month. It could be 6 weeks. It could be 3 weeks. Okay. So comments on faulty or defective design. Yeah, so these ones, okay, there are 2 questions here. So, and there's one more question. Typical on mines, yeah. Okay, maybe, okay, let's come back to the mines. Let me look at there's a question about, let me do the question on defective design. So defective design of one of the warehouse structure, or maybe it's the workshop at the plant, at the mine. This is at the mine. So there's a defective design, and due to that the building collapse. So if the building collapse at the mine, the policy won't pay, because it is a design problem. So this is how it is. We have a building, so part of it has collapsed, and this is due to the defective design. So the policy will not pay. And the reason also is because, not to forget, collapse and cracking of the building is not covered. And also going back, faulty and defective design is not covered, because you should go after the consultant. By right, you should go after the consultant. This design, guys, this design was done by the consultant. So the consultant. So by right, you should go after the consultant, and the consultant has a PI policy. The consultant got a PI policy. Got it, guy? Insects are like termites. Yeah, you could have termites attacking. Termites could attack this plant. You could have termites termites affecting this building, termites. So if the termites attack, then policy will not pay. Policy will not pay. Okay. So by right, to take care of that, to take care of the termite, you need to termite. You need to buy. You need to engage the. You need to engage the pest control. Pest control company. You need to engage the pest control company. All right, you need to engage the pest control company. That's how you take care of the termite. Now, did I answer all the questions? What was one more question here? Oh, in terms of the access clause. So how long is access clause? So we have two situations here. For section 1 is different, section 2 is different. So what is the access? So it's like this. So under section 1, section 1 is the material damage. Then section 2 is BI. So here maybe the excess is how much excess? It's 100,000. This is USD. Here for section 2, it is 4 weeks. It's 4 weeks. So take note, the excess clause is in terms of weeks. Okay, while the MD is in terms of dollars and cents. So this is based on dollars and cents. This one is based on time. Time BI is always on time excess. All right, so I hope that's clear. Terrorism, okay, terrorism, there's a question about terrorism. Will the policy pay for losses from willful action by insureds? Insureds employees are covered, yes. Willful by insureds employees, yes. Unless the boss himself caused the damage, then it's not covered. If the boss himself caused it, the boss asks the worker to do, then the policy won't pay. If boss caused, but the worker do it themselves is covered. Terrorism or attack can be offered as an extension. Yeah, it is an exclusion in the policy. I will show you later the exclusion, but you need to ask the reinsurer to arrange for you. You can attach terrorism extension, but it's very expensive. I'm not sure whether it's available in the African market. Now, NAWA says defective workmanship is very common extension request by almost all brokers here. No, but defective workmanship under what policy here? And NAWA, you want to talk, NAWA? Mr. NAWA? NAWA, can you talk?
Hello.
Hi, NAWA, are you a cedant or are you a reinsurer?
I'm a cedant.
You're a cedant. So you're talking about industrial all risk policy and as an extension for defective workmanship.
Yes, exactly.
Wow, this is a tough one, you know, but if it's a market practice, then I leave you to handle the market because I can't override the market practice because there are peculiar practices in different countries. I don't want to comment because each country have their special arrangement. So if you allow for defective workmanship, then you better, would you have a sub limit for it?
Sometimes that's what we do. We either cancel it or sublimit it, but I just wanted to understand from your end how the market practice is, so that sometimes maybe we can learn from you or adopt certain new practices.
No, because if it's a defective, how can the building be defective workmanship? The building is there for 10 years, or you know, it is not the responsibility of the insured. Then everything will come back to the insured, come to the insurer. Certain responsibility has to go to the party concerned. you know. All right, thank you for that. Thank you for your comment, Nava. Thank you. Then there's okay, Emmanuel says terrorism cover is available in Africa. Yeah, if you want to correct that, I don't know. I don't want to go into those kind of topics. It's quite sensitive. So, okay. So having said that, I go back to my PowerPoint slides. And where was I? Talking about deformation. These are some of the exclusions. Wear and tear, cracking of building. Yeah, we've already gone through this. Okay, theft. Now, theft only by violent and possible entry or exit of an enclosed building. So it's important to have a proper building. So what happens is, okay, let me give the example for this. If this is a mine and they have a store here, so this is a store. This is a store, and they have all the material kept here. These are some expensive material. Let's say these are some. This is the stock, and they also keep some stock inside here. Okay, they also have some stock here. Stock inside the building. So they have stock inside the building, and this one is the mine. This is the mine, and they also have a fence, or they have a fence. So here is the fence. This is the gate coming in. All right. So this is the fence. This is the fence. So what happened was there was these people, they jump over the fence. How they came in was they jumped over the fence, and they came here and they stole this, and then they broke the door here, and they went in and stole this. Now, is it all covered, guys? Is it all covered? Is it all covered? Who's going to answer this question? Maybe I ask.
Pooba, I think not all will be covered.
Who is speaking?
Edith.
Edith. Okay, so the ones in the open, one is in the open yard. This is the open yard. So the open yard, will it be covered?
I don't think that will be covered because there was no forcible entry.
No, they broke. Yeah, the open yard will not be covered. Okay, all right, correct.
The one where they gained entry to the store forcibly can be covered.
Yes, correct. So this is what I want to say, that only this one is covered. This one is covered. This one is not covered because the culprit just jumped over the fence and came in, but they broke the door, they broke the drawer and went into the building. So in this case, only one part is claimed, but the stock which is in the open yard is not covered because there's no break-in. Okay, stock outside would not be covered. Yes, okay. No, Michael, you're wrong. It's not all covered. Okay, that's good. Thank you guys for your quick response with the answers. So now I go back to the slides. So theft, it says that only with violent and forcible entry or exit of an enclosed building. So it must be an enclosed building. So maybe next to the mine, there's a building or something like that, then it's okay. Okay, fraudulent or dishonest act will not be covered because you're going under a separate FG policy. You go under the FG policy. Okay, you go under the FG policy. So what about the type of stock designed to be outside? Yeah, so but the important thing is you need to take some measures. You got to so Joel says, is there any mechanism to cover stocking in open spaces? No, the policy says so. So you have to take some precaution. You need to lock it up. You can't just leave it like that. You cannot make it easy to be stolen. So for example, what they can do is they can take some precaution by locking this up. So what happens is it is possible that you use some mechanism here to lock it all up. So it's locked. It's locked with a cable or some special device. So you've taken some extra precaution. Then it can be argued that they have broken that and stolen it. So then it's fine. Okay, so that's my answer. How do they exit? Yeah, maybe they left through this door. I don't know. They left through this door. Okay. Some way. It can be proved by CCTV. Well, it depends. Veronica, I don't have an answer for you because I need to look at the policy. I need to look at the explanation. Yeah, Shepo Money, you're right. The client need to engage a security guard. They need to engage to security guard. Does this apply in motor? Theft or parts? Olivia, I can't talk to you about motor policy because I'm not the motor insurance expert. Okay, I rather not comment about motor. Okay, good guys. So we are now talking about the cost. Okay. Now, dishonest acts are not covered. Dishonest acts are not covered. And what else? Where else do we go? Disappearance or inventory shortage. Now, what is disappearance or inventory shortage? Now, this is called the disappearance is during the stock check. So normally, when the loss is discovered during stock check, policy won't pay. Stock check, discovery loss will not be covered. Okay, stock check discovery loss will not be covered because it is actually by disappearance, and you can't tell me when is the date of loss because you don't know when is the date of loss. It could have happened over 1 month. So that's why the policy will not pay for that. Okay, the policy will not pay. Joel, your question is why is it fenced in a boundary wall? Why need to be locked? Yeah, so if you don't put a security device, then the policy won't pay because there was no violent break-in into the building. Yeah, so yeah, Zulkifli already said stock in open yard already in the boundary. No forceful entry, that's right. No forceful entry, policy won't pay. Okay, guys, so it is coming to 12:30. Can we just take a 5 minutes water break? 5 minutes water break because some of us are tired. We just want to take 5 minutes. 5 minutes water break. Okay, let's take a 5 minutes water break. Yeah, 5 minutes. 5 minute break. 5 minute water break.
Yes. fraudulent or dishonest acts, which
Yes.
should be covered under fidelity guarantee. I have seen some policies, some IAR policies, where they included as a peril insured fidelity guarantee. Now, if it's part of the policy, then it cannot be an exclusion anymore.
Yeah. So there's a special request from the broker that they want to cover for the FG element as well. So it's up to the underwriter to accept it. So the underwriter allows for FG for a sub limit. Maybe the sub limit is only 50,000 or 100,000. Yes. It's up to the underwriter to accept it. Similarly, you will see in the IAR policy, it excludes locomotive. But sometimes the IAR is for a particular mining business where they have the locomotive being used in the mine. So in that case, they need to cancel that exclusion and endorse it to cover the locomotive that is serving the mining business. So it is flexible. It's up to the underwriter to evaluate based on the request of the customer. Similarly, MB policy. MB policy is not covered in this machine. So you can extend it. You can extend the MB policy. Okay.
Thank you.
Thank you. Thank you. Zulkifli says, I mean to say stock in open right is already within a boundary which is under lock and key. Why it won't be covered? So this is, Mr. Zul, the feedback I'm giving is based on this particular wording example. There are some other wording which is very wide. They have different terms. So it depends. It depends. But generally speaking, the wording is talking about violent, forcible entry into the building. So there must be that. But sometimes you want to be generous, you want to give a better cover, that is up to you. That's up to you. I cannot say. It depends, you know. So there's a comment here from Austin. Austin says that stock check discovery should be excluded. But why? What if the incident occurred a day before the stock check? That is fine. Yeah, if it was a genuine armed robbery that happened one day before the stock check, then it's okay. It's just that a loss discovered during stock check is not covered, because every month on the 25th of the month, they will do a checking, and they found that the bottles were missing. Every month, this month they found 10 bottles missing. So when did it get lost? Maybe it was pilferage. So pilferage will not be covered. What is pilferage? Pilferage is stolen by staff. So why the reason I'm telling you this is pilferage will not be covered. Pilferage will not be covered. Pilferage will not be covered. So so the staff themselves stole the item. So that is called pilferage. But if there was a robbery and there was a robbery and items stolen, then okay, then policy will pay. Then the policy will pay, because it's a robbery or it's an armed robbery. Then okay, policy will pay. All right, so that's the sort of a difference about that. Now there's a question about there's a point to ask about subsurface. Subsurface below the ground industry. For example, this will be more to do with the mining business. So in mining business, so just to say here, in the mining business, mining operations, sometimes you have things like grinding work. Sometimes you got crushing work. So such work or activities are considered as part of the subsurface activities, and normally it's related to the mining business. So these are, it's all part of mining. All right. So yes, for FG is for employee dishonesty. Striking workers, losses of damage from striking workers can be covered. Yes, yeah, that's fine. The workers went on a strike and they damage it is fine. That's covered. That is covered. That is fine, as long as the management didn't ask them to do. Now, Ashok says theft precaution warranty for stock in open does not surface of valuable, lightweight, mobile equipment. Yeah, normally it's the heavy items. Heavy item you can put it in the open yard. Yes, correct. That's good. Thank you, Ashok. Thank you for your comment. All right, so I go back to my slides. We are talking about disappearance will not be covered. What else? Exclusion, overheating of boiler, failure of wells. Okay, again, Miss Edith, I want to tell you, overheating of boilers are not covered because you need to buy a boiler policy. But sometimes underwriter want to include the boiler coverage in the IAR. It's possible as well. It is possible to include the boiler policy here. It is possible. Okay. Damage to machinery, malfunction, failure, derangement, breakdown, not covered, but you can attach it under MD policy. That's what I say. It's up to the underwriter to consider because the broker asked for the coverage. All right. So that's one. And then bursting overflow is not covered, especially when the premises are empty. Why are the premises empty? Because they found a new premises, so it's not covered. So let me just draw that one. Why I'm saying it's not covered? Because it's empty. Okay, so let's say this is the mine. This is the mine. Where's the mine? Okay, this is the mine. This is the mine, and they have two buildings here. This is one building, and they have another building here. So this is the old building, and this is the new warehouse. This is the new warehouse. So this one old. So what happened to the old one? No longer in use. So no longer in use, nobody is there. So everybody working here, workers are here. So anything happen inside here, so why won't the policy pay? So if the pipe here bursts, Edith, are you there, Edith?
Yeah.
Why
yes.
If the pipe bursts here, why the policy would not pay? Because it's no longer in use. No more inspection. No more inspection. Got it?
Yeah.
No more inspection. So the underwriter doesn't want to accept that because it's no longer in use. Got it? Okay, so that's what I'm trying to say. It's no longer in use, and hence the policy will not respond for that. So this is the point on bursting overflow, especially when it's empty. Any willful act, willful negligence of the insured or any person acting on his behalf. So just now there was a question in the chat group. Somebody asked striking workers. Austin is talking about striking workers. So striking workers is covered as long as the insured is not involved, because the boss didn't ask them to do it. The boss didn't say to do this. The workers did it on their own. The workers did it on their own. So it is not a willful act. Can you understand that? It's not a willful act. So policy will pay for this. Let's ask him to come on the line. Is Austin Oyuga, are you there? Austin Oyuga, are you there?
Yes, I am.
Austin, where are you from, Austin?
I am from Juba, South Sudan.
Sudan. Are you
Yes,
from Sudan?
South Sudan.
South Sudan, South Sudan. Okay.
Yes, South Sudan.
So the answer to your question is the striking workers, they were very upset with the management and they went and damaged the property. So it's not, they are not willful. They're not doing it with the management instruction. They're doing it themselves. So policy will have to pay.
Okay.
Are you okay? Because as I
Yeah,
explained, because the management didn't ask to do. But if the management asked them to do, then it's different. All right?
Yeah. Okay.
Okay. Thank you. Thank you.
Thank
Moving on, we have cessation of work. Sorry, cessation of work or loss of market. So if the business loss, the policy will not pay for the business loss. Okay, the policy will not pay for that. War, invasion, civil war, policy will not pay either. So this one I've already, somebody tried to ask me just now, I'm going to say it's an exclusion. So you need to buy additional cover. You need to buy political risk or terrorism cover for this. But by and large, the premium is very expensive. By and large, the premium is very expensive. Civil commotion, you can buy this under the, you can buy this endorsement. Quite common to buy this endorsement, which is called SRCC, strike, riot, civil commotion, civil commotion. So you can buy the extension. So customer can buy extension. Yeah, client can buy this extension. Strike, riot, civil commotion. So this is a common extension. Again, I'm not sure in the African market how it is done. So there's a comment from Namushi. So Ivan, hold on, lightweight. Ashok said something. Ivan Mail, even if the warehouse is not in use, is declared. Yeah, if it's not declared, the policy says that it doesn't pay for bursting water pipe, but it pays for the fire. It'll pay for fire. Namushi has a question, but I don't see Namushi's question. But meanwhile, Leonard Musau. Yeah, Namushi.
This is Namushi.
Yeah, Namushi, what's your question?
Yes, thank you very much. Say a mine has got multiple policies. So one of their policies is maybe fire damage, and then maybe through another broker, they've got industrial or risk.
Yeah.
So there's a fire, and maybe one of the exclusions for the fire policy is that fire caused by electrical faults is not covered.
Yeah.
So now when the adjuster comes and assesses and establishes that the proximate cause is an electrical fault and this fire is not covered.
Not covered. It's not covered in the fire policy, but IAR should pay, right?
Yes. So now, because the insured has claimed under their fire policy, but as an adjuster, you discover that they do have an industrial or risk policy where this particular peril is covered.
Yes.
What happens then? Do you consider all their policies and say, okay, for as much as it's not covered under this policy that they've claimed under, they still do have cover? No, or do you just leave it as is because they've claimed under the fire policy and it's not covered, then no pay?
So I believe the IAR policy should respond. Only the IAR policy will respond, right?
So should the adjuster be the one to make that recommendation?
Because the adjuster, is he acting for different insurer or the same insurer?
For the same insurer. Suppose that both policies are underwritten by the same insurer.
Then it's okay, quite straightforward. He just says that the fire will not respond, but the industrial or risk policy will respond. That's it. Why do you think there's a dispute? You think a contribution will apply?
No, I'm just trying to be clear.
Okay, then no problem. You're all right now, right? I think just the IR policy will respond. That's about it. Okay, but maybe they were wrongly advised by the broker to have two policies, Namushi. They shouldn't have the two policies. Namushi, are you there?
Yes, thank you so much.
Okay, thank you. Okay, Leonard has got a comment. Under IR policy, MB is excluded, but in a situation stocks are covered on all risk basis under IR, the stock can get damage on MB. Will the stocks qualify? Yeah, of course, because MB is an extension, but in this case, you're saying by, the stock will be covered because it's sudden, unforeseen physical loss or damage. It should be covered. As far as the IR policy, it should be covered. Claim for stock should be covered. Yeah, no problem with that, Leonard. Why not average if they are different insurers? Why average? For which one? Tawfiq, I don't know which question you refer to. Ashok, why will an insurer have fire as well, IR for same risk? Exactly. So Ashok, my point to Namushi just now is the broker advised him wrongly. He made him buy a fire and a IR. So there's some sort of duplication and the wasting of premium payout for in that case. Ashok, I was going to ask him the same thing as well.
So,
okay.
Sorry, maybe let me just clarify. So what happens sometimes in Zambia, especially for the big corporates, they've got multiple brokers. So this broker will advise these policies and another broker will advise different policies, and the insured will pay for both, and they end up having double coverage. It happens quite a lot.
Yeah, but in the example that you gave just now, the fire policy is not paying. So no problem, right? No problem. Fire doesn't pay. We only pay under IR. So there's no dispute to talk about. Correct? Namushi?
That's correct.
Yeah, okay. That's it. Okay. So I think Joseph had put a comment now. Misled by the broker. Yeah. So this is local practice in different countries. I don't want to say. For your information, in the Myanmar market, would you believe that? Just to tell you guys, in the Myanmar market, you know, Myanmar is a country near Vietnam. So in Myanmar, they have the IAR policy. They have section 1. They have section 1, which is the material damage. They have section 2, which is the BI, and then they even have the section 3, which is the public liability. So this is in Myanmar. So I can't say so many things, but this is their local practice in Myanmar. They have 3 sections. So this is a bit strange. They have an arrangement because the authority does not allow them to do public liability. They don't allow. So they park it under the IAR, but they put it with they park it here, but they put a small limit here. Okay, so different countries have different practices. I can't comment on that. This is very peculiar to different countries. Okay, so we are now coming to talk about exclusion. Where are we now? Where are we? We are talking about acts of terrorism, confiscation. Okay, maybe we should just, or we can't continue because it's coming to the time of ending the class. So willful act, I just want to say again, somebody asked willful act of employees is covered. Teshom Aresa, willful act by employees is covered, but willful act of the boss will not be covered. Yeah, that's what it says. Willful act or negligence of the insured or any person acting on his behalf will not be covered. Okay, so guys, it is coming to 1 o'clock Zambia time, and maybe what we should do now, we should take a break. There's a comment here before that. from Ashok Chawla, insured shall sue the brokers. Is their duty on covers, same insured cover fire, same risk. Yeah, but this is different. Ashok, this is the practice in Zambia. Zambia have their peculiar practice. I don't think they seem to get the same type of, it's a peculiar arrangement in the Gambian market. They tend to get more than one policy. So we are coming to the end of the class now. We will stop here. But before I end, I just want to ask all of you to type, what did you learn in the class today? Please type in the chat group, 1 word or 2 words or 3 words. What did you learn over today? What did you learn? What did you learn? Okay, please type in the chat group. What did you learn? What did you learn today? I want everybody to type a few words. Okay. Appropriate cover for faulty design, tsunami is covered, independent liability calculation, exclusion is covered, PEP concept, IR exclusion, I've got a better understanding, exclusion, IR policy is flexible, PEP, areas of concern in the mining space, PEP, difference between IR and PEP, exclusions in mining, exclusion IR policy, PEP, what is IR all about? South Africa employs nearly 500,000 people in mining, better understanding IR, proximate cause of tsunami is earthquake. Okay, a good understanding MB and IR. Okay, that's good. IR policy has 2 sections, section 1, section 2. Standard section IR, MB can be in IR, MB can be extension. Okay, good. Good, guys. Everybody has given some points. Before we go, shall we all take our group photograph with everybody together? Shall we take a group photograph? Can we have our videos on? Let's take a good group photograph, then we say bye. Yeah, because tomorrow we're going to continue. Thanks, guys, for your feedback. Is Maureen and Rose and our friends from Clapton Re around? Cynthia, Tiongi, Mr. Webster, Mr. Mukuma, are you guys here?
No.
Let's take a group photograph.
Here.
Yeah.
Hi, Pooba, we're here.
Okay, that's good. That's good. Let's take a group photograph for the record. I know we're going to take another photograph tomorrow. Joseph, you said mining is a risky business, as what Swiss Re was quoted. IR policy and cover, good. All of you have said a lot of things. Oh, Cynthia is there as well. Yep, Ivan Mel is there. Who else? Mr. Balkisan is there. Maureen is there. Colin Hassan is there. Good to see you guys. Okay, we've got quite a few pages of photos to take. So quite a few pages of photos to take, and don't worry, we are continuing tomorrow. Tomorrow is day 2, so please come back same time. We're going to continue day 2. We're going to talk a bit more on the IR, then we're going to jump to the machinery breakdown. But as what Mr. Webster, the CEO of Clapton Re, told us this morning, today is just today and tomorrow is the first part. We will continue again in a couple of months' time for the part 2. Maybe the part 2 may be sooner, I'm not sure. So unless Cynthia wants to say something. Cynthia, you want to say something on behalf of Clapton Re for day 1?
Hi, thanks, Pooba. Hi, can you get me?
Yeah, I can hear you. Proceed.
Okay, fantastic. So on behalf of Clapton, really, I think we just want to thank everyone for their very active participation. And would also like to thank you, Pooba, for nicely unpacking industrial all risks. And we look forward to carrying on tomorrow. We encourage everyone to log in a bit earlier. I know that there's going to be a poll. We're starting with a poll. And Pooba will cover some of the questions that may not have been tackled today. So on behalf of Clapton Re, thank you so much for the support. Thank you so much for the participation, and we'll see you tomorrow. I'm not sure if OESAI would like to say a word or two.
Yeah. OESAI, are you there? Rose or Maureen?
So just to say thank you for logging in. Thank you again to Clapton Re for giving our members this opportunity. And thank you to Pooba for taking it up. I think Cynthia summarized it all. See you tomorrow, 9 a.m. Central Africa time and 10 a.m. East Africa time. Log in with the same usernames so that we can you can be able to receive certificates as well as CPD prints from OESAI. Thank you, everyone. Enjoy your afternoon, and the evening as well.
Maureen, we'll take the photograph. So can I ask everybody to give a thumbs up for Clapton Re and for OESAI? So we take a group photograph. A thumbs up, please. Give us a thumbs up so that we can see a nice smiling photograph from everybody. A big smiling photograph, all guys. Yeah. Cynthia, yeah, your big smile is there. Be sure. That's it. That's good. Yeah. So I'm going to take a few because there's a few pages here. Yeah, big smile, guys. A big smile and a thumbs up as well. Yes. Yeah, that's page 2. Now I'm going to page 3. Where's the page 3 smile? Yes, that's a page 3. Yeah, I've got page 3. Now I'm going to page 4. A big smile, page 4, guys. Yeah, I got page 4. Let's go to page 5. That's where it gets a bit, the video is not on page 5. And page 6, there's no video. Page 7, there's no video. Okay, guys, goodbye. Thank you very much for your support. Thank you for your participation and see you guys tomorrow. Thank you.
See you. Thank you so much.
Thanks,
Thank you very much.
Thank you.
See you tomorrow.
Thank you.